Okay, I think we seem to have lost
This
it.
question is to
Okay.
me.
Okay. Go ahead, go ahead.
Yeah. So I think AB Capital is a better choice. The stock is consolidating at higher levels. I don't see any meaningful profit taking coming in anytime soon. Any dip from the current levels towards 330 should be utilized as a fresh entry. Take a stop at closing stop at 320, maintain long position, and add once the stock crosses 370 odd levels.
Right, so that's the view coming in on all of these names. But the next question that we have is from Dinesh, who's writing us from Noida, asking about power stocks from a long-term perspective. He wants to know if we can continue to, if we can go ahead and buy something like an NTPC or Tata Power or a combination for both of these in the next 5 years. Avinash, what would you recommend?
I think within the choice given, I think Tata Power seems to be a much better bet. I think the investor can also look at transmission companies like KEC International. I think he should have a basket of stocks covering power generation, power distribution, and the power equipment kind of place, which I think can give him better alpha over the next say 3 to 5 years.
Okay. All right. So that's the view coming in on these power names. But we've got our next caller. Divi Gupta is calling us from Pune. Mr. Gupta, hi. A very good morning to you. What's your query about?
Yeah, good morning, madam. Yes, madam.
Go ahead. Ask your question.
My question is, I have 1,440 shares of Eicher Motors.
Okay.
Yes. And my cost is about 150 rupees.
Okay.
Because his share got split now. So now what should I do?
Okay. Okay, got your question, Mr. Gupta. I'll take this up with Avinash. Avinash, you heard his query. Do you think, can he continue to hold Eicher Motors after the split as well?
Yeah, I think he can continue to hold because his cost price is significantly low. Most importantly, I would suggest that book 50% profit, make the shares free, the remaining 50%, and then hold this stock for the next 12 to 18 months. I think the CV cycle is now just turning around, so you could expect better numbers from the company. But I think he could definitely encash 50% of his gains at the current level.
Okay, all right. The next question that we have is on Stalin Fluorochemicals. Amit Kapoor from Chandigarh is asking this. He says that it seems cheap as compared to its peers where PE goes. Should he continue to hold this for the next 2 to 3 years? Avinash, would you recommend that?
Yeah, I think, in the fluorochemical space, there are not many players. And I think this is a recent listed entity. And I think recently they've got approval to put a new facility in Rajasthan. So I think, numbers should definitely get better. But I think he needs to stay invested for the next 2 years to get the full benefit of this, growth rally, which is expected going forward.
Okay, all right. So that's we coming on Stalin India Fluorochem. But the next question that we have is from on NBCC. Venkat Ramani from Bengaluru is holding 600 shares at the levels of 80. She wants to know whether she can buy more, hold or sell for the next 12 months. Gaurav, from a 1 year perspective, what are the charts indicating?
No, I won't be suggesting to adding more position at these levels because the stock is not at all giving any signs of meaningful reversal coming in. But yes, he can hold on to his position because somewhat of the supports are placed around 84 odd level. So I don't see it falling below that. My take is that she should hold on to a position with a stop at 84.
All right, so that's the view coming on NBCC, but shifting focus and of course, as always, we try to get you how the FNO setup is looking like, and we have Sharad joining by to give us the cue. Sharad, how are the cues shaping up right now?
Mahima, it's a big turning negative. Earlier, last 2 to 3 days, we are complaining that the markets are in consolidation, but the key technical average levels for Sensex has been broken, and you see the heavyweights which are there, they are not giving in a good amount of support coming in, be it HDFC Bank, HUL, Ultratech, Cement, ICICI Bank, all of them dragging Sensex down. Remember, slight bit of positivity is definitely there in IT stocks, but is it very convincing? Will it hold up? That's the key question. BankX also, the story remains same, and it's a slightly much more weaker setup now as compared to Sensex. Going ahead, a stock specific also, there isn't so much excitement in all of the 4 calls which I'm going to share because they are in a very narrow range. Petronet, LNG and Eternal are there where there is a long build-up happening. And if you look at the short covering, that's also not that convincing. It's Kalyan Jewellers and Vari Energies. Long unwinding also, don't expect much major trade to happen. But yes, the market is shifting towards shorts. And this is pull up the key shots coming in the capital market theme. CDSL, Angel One, all of them also cracking in the trade, and the NBFCs, of course, on the Bihar MFI news flow, all of them are seeing deep gashes also. Of course, some in the cash markets are also there, but that's the entire action basically happening in the shorts in today's space.
Okay, Shah, thank you so much for giving us those details with regards to where the F&O space goes. But moving on, I think Narendra is calling us from Tamil Nadu. Do we have him, Narendra?
Yes, madam.
Yes, go ahead, ask your question.
Madam, I have holding a Clean Life Science, madam. It is a chemical company. I am holding around 1,500 quantity at the rate of 920, madam.
Okay.
Shall I exit or continue to hold, madam? Because it is a huge loss in my portfolio. So I am very much affected by only because of this big cap stocks, madam.
I can understand that, Narendra, and I see that you're sitting on a loss of over 2.9 lakh rupees. Avinash, I'll take this up with you. What should Narendra do right now? Is there any scope of recovering his losses?
No, I think, Mahima, this company, ever since it went public, I think, it has never delivered. And I think investors have actually been largely disappointed because of the poor set of numbers. And quite ironically, this company was always traded at a premium. Even now, the valuations seem to be fair to expensive. So I think my sense is that since he has held on for such a long time and his capital is not performing, it's better that he switch over to some other companies. I think maybe, from the banking sector, we continue to like the PSU banks like Bank of Baroda, Canara Bank, or maybe from the data center segment, something like an Anantraj at 540. Could be an interesting bet because these are all growing sectors, and our sense is that over the next 12 to 15 months there could be a significant amount of traction in this area compared to clean science. So I think better to switch and obviously allocate your capital to get a better alpha.
Right. The next caller query is coming from Bangalore. Garima, you can go ahead and ask your query.
Yeah, my query is that is it good time to enter HDFC Bank for long term, at least 1 year?
Okay. Avinash, any view on HDFC Bank from long-term perspective for the next 1 year actually?
So I think below 900, Somit, it could be a good buy because, I think most of the negatives are factored in. Although one should remember the fact that last 2 years, the stock has done nothing. So it has underperformed. But I think hopefully if the banking cycle turns around, we have seen credit growth now inching over in double digits. And it's one of the larger banks. So I think, yes, I think a small exposure can be taken, but below 900.
Okay, all right. So that's if you're coming on HDFC Bank. But with that, Gaurav, thank you so much for taking out the time and helping us answer all those queries. Viewers, time to slip into a very, very short break, but we'll be right back answering your queries on the other side. So do stay tuned.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
After the roaring success in Delhi, Hyderabad and Mumbai, The NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
Welcome back. You're watching Ask Profit on NDTV Profit. The next caller query is coming in from Bangalore. Vishwanath, you can go ahead and ask your query.
Yeah, hi, good morning. Thank you for taking my call.
Yes, Vishwanath.
Actually, I want to know that is it a Trent or Tata Consumer, which is from the same group, so which is better at this point of time?
Avinash, what would be your view here? Tata Consumer or Trent from long-term perspective?
No, I think over the next 2 years, if one has to take a call, then I think Tata Consumer could be a better bet. I think not only from the point of valuation, but in terms of the kind of product category they operate. They have a very large and a very extensive product basket, which they sell not only in India but abroad. So I think Tata Consumer could be a better bet. I think, but the investor needs to take a 2-year call. I think valuations are not cheap. But I think looking at the kind of branding power and the plus the network the company enjoys, a 2-year time frame can give a decent risk reward.
All right, so that's the view coming in on both of these Tata companies. With that, let's also welcome in Rajesh Bhosle of Angel One joining us now. Rajesh, a very good morning to you. The next question that we have is for you. It's on CoForge. And Pravesh is asking this question. He wants to know if this is a good time to add. He's owning 29 shares at the levels of 1264. Would you recommend that? Rajesh, I think you're on mute.
Yeah, I hope I'm audible now.
Yes, you're
yeah,
audible.
So IT packs are under pressure, and in fact, if we see well before IT packs came under pressure, this stock had already given a breakdown. So we expect the weakness can extend, and we'll suggest to wait for now. But if it comes around the levels of around 1100, that would be ideal level to average, because in the past during July 24 we saw a rally starting from the levels of 1100 to 2000 levels. So if it dips around 1100, that would be ideal level to add on, but as of now the stock is under pressure. Avoid catching the falling knife.
Right. The next query is coming in from Mahathi from Hyderabad. He is holding 3,500 shares of Ola Electric, bought at a price of 42. He wants to know whether should he average at the current level or exit. He's currently sitting on a loss of around 50% he's saying. Avinash, what would be your view on this, Ola Electric?
No, I think I wouldn't suggest him to average here, Swamit, because as all of us are aware, the company continues to be on a very slippery kind of wicket. Q3 numbers were extremely bad, and I think fourth quarter is also going to be on similar lines. So I think it's better that he, shifts to some other stock. I think something like an IDFC First Bank or maybe a Federal Bank or a Bank of Maharashtra. These are much better bets in the current scenario compared to Ola Electric.
Okay, all right. So that's the view coming in on Ola. But the next caller, Parab, is calling us from Pune. Parab, hi, a very good morning to you. I believe your question on DRL.
Yes. Hi. My question is regarding Dr. Reddy. I'm holding Dr. Reddy's 100 shares from last 1 year at the rate of 13.55. And my question to the fundamental analyst, Mr. Avinash Gorakhpur, what future he think about this stock?
Okay, fair. Got your question, Parab. Avinash, your view on Dr. Reddy's?
No, I think we can continue to hold. See, I think the stock may not have done at least for the last 1 year, but I think current trends clearly point out that the next 8 to 12 months would be promising for Dr. Reddy's. And I think Q3 numbers have also been quite, reasonably good. The commentary has been good. And I think hopefully this year the US market should present a much better and a bigger opportunity for the company. So I think, continue to hold for the next 6 to 12 months. I think you can expect a decent risk reward going forward.
The next query is coming in from Tenzuk from Kerala. He's currently holding around 308 shares of Bharti Airtel, bought at an average price of 1,940. He wants to know, let's get in Rajesh here to understand the short-term view on this counter. Rajesh, your view on Bharti Airtel?
Yeah, so this stock has been an outperformer, but if you see since November, the short-term momentum has turned negative, and maybe the weakness can persist in the near term. So as of now, short-term view remains negative, but somewhere around 1750 to 1780 levels, there's a strong support of key retracement and long-term moving averages. So short-term remains negative, but if it comes around 1750 to 1780, that would be ideal levels to add more around those levels. So short-term is negative, but at a lower levels can be added more.
Okay, all right. So that's the view coming on Bharti Airtel. Mohan is calling us from Bengaluru. Mohan, hi, a very good morning to you. What's your query about?
Very good morning. I just want to know, can I buy Shriram Pistons or Navin Flooring at this time for a long-term perspective?
Okay. Avinash, Shriram Pistons versus Navin Flooring, which one would you pick?
I think Shriram Piston looks to be a better choice. I think they have recently acquired a company called Grupo Antolin, which had a revenue of more than 1,200 crores. Very marquee clients like BMW, Aston Martin, then typically Tata Motors, Mahindra. So I think the real kicker will come in FY27. So I think he can definitely buy at the current level.
Okay. All right.
The next query is coming in from Sunil from Pune, and he wants to know whether should he buy Vishal Mega Mart from short-term perspective. Rajesh, any view on Vishal Mega Mart?
So I would suggest avoid for now. Till yesterday, there was some positive momentum, but there is a strong gap down opening and volume-based activity is also there. So as of now, wait. The short-term momentum is definitely weak, where every bond is getting sold into around 89 EMA. So wait for now. The stock is likely to slip further towards the levels of around 112 to 110 levels.
Okay, so that's the view with regards to where Vishal Mega Mart goes. But the next question that we have is from Mr. GK, who's writing us from Bengaluru, asking about two counters, that is Ashok Leyland and Tata Motors commercial vehicles from a 4 to 5 year time horizon. He's asking as to which one should he invest in. Avinash, yesterday only Puneet did a story on how all of these commercial vehicle stocks have really run up. Valuations are also not looking cheap, but is whether there is growth going ahead or not. And he had laid down factors that yes, there could be possible legs of growth going forward. But between these two, that is Ashok Leyland and Tata Motors, which one would your pick be?
No, I think commercial vehicles we would like to bet on Tata Motors. I think although Ashok Leyland has also done pretty well, but in terms of the market share, in terms of the product positioning, I think Tata Motors CV has got a better kind of runway ahead. And I think the investor needs to keep a 12 to 18 month horizon, because, the CV cycle has just started looking up. And hopefully, if GDP numbers are good, if the economy grows, I would not be surprised that the CV cycle could give a better run rate for a player like Tata Motors. Of course, Ashok Leyland would also grow, but relative to that, Tata Motors CV definitely should do better.
All right. In fact, we've got our next question from Vinay, who's writing us from Hyderabad, asking about AGI Green. He's got 100 shares at the levels of 700, sitting on a loss of over 15,000 rupees. Rajesh, your view on the charts on this particular counter?
No, I mean, the stock remains under pressure, and I mean, in last few weeks we have seen a volume-based sell-off. So, expecting further downside in the near term. Possibly, the stock can slip towards the levels of around 510 levels and further lower in the near term. So, use any bounce towards 600 as an exit opportunity. We expect the underperformance to continue in the near term.
Next query is coming in from Ramcharan from Hyderabad. He's holding a few shares. In fact, 616 shares of NHPC bought at a price of 89 rupees. He wants to know whether should he average more or continue to hold this count. Avinash, your view on NHPC?
No, I think you can continue to hold and maybe average more, but this stock has always moved in a very slow kind of pattern, Somit. So, I think if the investor has got a 12 to 18 month time frame only, then he should average and stay invested.
Okay, all right. So that's if you're coming on NHPC. We've got our next caller. Ravi is calling us from Bengaluru. Ravi, hi. A very good morning to you. What's your query about?
Yeah, I just want to know whether I can accumulate SpiceJet at the current price, because it went up to 12 rupees. Then because there is no much of competition in that field, other than Indigo. So is it the right time to bet on SpiceJet, or it's not worth investing? I would like to know the advice.
Okay, Ravi, got your question. Avinash, I know fundamentally you would prefer Interglobe Aviation, but your view?
No, I think, currently at this level, if the investor has got the stomach to face the volatile market trend and be prepared for a little bit of volatility, he could definitely take a position at 15, 16 rupees. But please understand that the company still continues to be on a weak wicket as far as its financials are concerned. So I think the aviation space is growing. You'll have to be very watchful on the company's performance and the kind of commentary and the traction it shows. So maybe at around 15 rupees, a small exposure can be taken, but I think with the caveat that in case the company does not perform well on the financial side, then obviously it could turn out to be a loser.
The next caller query is coming in again from Hyderabad. Nagarjun, you can go ahead and ask your query.
Sir, good morning, sir.
Yes, good morning.
I bought 100 shares in the Network Technologies at the levels of 3,100 rupees. Can I hold or exit, sir?
And can you hold it for long term?
Not for long term, sir. Not truly for long term. It may be, I thought that in 3 years, it's around like 9,000 rupees or 10,000 rupees. After 3 years, I thought that.
3 years.
Technologies are, the company are working on AI structures.
Okay.
But
got it.
short-term purpose, I am asking you, sir.
Got it, Nagarjun. Avinash, any view on Network Tech for the next 2 to 3 years?
Yeah, I think the investor can definitely hold on. I think this is a stock which has always been fancied by the market, and I think the AI tool facilitator is definitely going to help benefit companies like Network. But I think he needs to stay invested for the next 2 to 3 years. Typically on a very small quantity, most investors try to book out very fast. So I think keep a time frame of 2 years and stay invested. You could definitely expect a decent price reward.
Okay. Brainbees is the next one. We've got Shiva Kumar who's asking as to what is the view on this particular counter. Rajesh, enough data on the charts to give a perspective?
Can you repeat the symbol?
Brainbees. So that's FirstCry. I'll get you the symbol. It is FirstCry only.
Yeah, so I mean, in the last 2 weeks, the stock has seen a vertical fall from the levels of around 290, and definitely the momentum remains weak. So we'll suggest, yesterday there was a bullish engulfing, so some kind of base formation is definitely there, but we expect this stock to underperform in the near term. So use any bounce towards 20 EMA, that is around 235 to 240 levels, to exit long positions.
Next caller query coming in from Mumbai. Nishad, you can go ahead and ask your query.
Yeah, I want to know about transformers and rectifiers, and I also bought Skipper. I just bought them today. I have a long-term view. I bought them because I was bullish on the theme electrification. So is it right? Should I buy more?
Okay, quickly, Avinash, your view on transformers and rectifiers. Should he continue to hold?
Yeah, he can continue to hold because the price has corrected also quite significantly, and within the transformer space, we feel that this is a company which is sitting on a very healthy order book, and I think the traction in this segment is going to grow. So continue to hold. I think keep a time frame of at least 12 to 15 months going forward.
Alright, so that's the view coming in on Trill. But viewers, time to slip into a very short break, but we'll be right back on the other side, so do stay tuned.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
साउंड चेक हो गया? विजुअल्स रेडी? लाइट्स ओके? एवरीथिंग इज रेडी? वेट, आर यू रेडी? ये सिर्फ एक कॉन्सर्ट नहीं है. दिस इज माई लाइफ. दिस इज माई स्टोरी. वन नाइट, नो रिपीट्स. बुक योर टिकट्स नाउ.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me.
Welcome back. You're watching Ask Profit here at NDTV Profit. Just a quick look as to how the markets are doing at the moment. The Nifty 50 still, in terms of where the numbers go, it's still down by about 0.6%. Around 160 points of a downtick is what we're seeing. Off from, of course, the day's high point. And with regards to where some of the names goes, IT pack is doing fairly well. Eternal also, topping that chart. But with regards to where the laggards are concerned, let's try to pull up the Nifty 50 heat map and see as to what are the counters that are putting pressure. Interglobe Aviation down by about 2.3%, followed by Bharti Airtel, Dr. Reddy, Tata Consumer and Nestle. So that's the view with regards to where the benchmarks go. But shifting our focus to the recent listing on the BOSES, that is Gaudium IVF and Women Health got listed at a 5% premium, now trading around 3.8% higher. My colleague Ridhima Bhatnagar spoke to Miss Manika Khanna, CMD at the company, listening to that conversation.
By asking you that, the companies just got listed and saw strong retail participation, what's your message to the investors on the key priorities for the companies going forward?
Great. So, my message to the investors, Ridhima, is that we are here for the long haul. We are here to create a legacy. We are going to aggressively make 19 hubs and equivalent spokes across the country. We already have a pan-India presence with 7 hubs and 28 spokes. So we understand, all 4 corners of the country quite well, because in infertility that matters. Like tuberculosis in Bihar could be more rampant and become the reason. Aging eggs or PCOD in Punjab could be a reason. So, we understand the entire country. And we work, we are a completely SOP driven organization. So to our investors, I would like to say that we are on a roller coaster and we plan to build these 19 hubs, make a lot of money for us and everybody.
Could you specify any, particular cities you're looking at for expansion?
Yes.
And also 2-3 quick allocations which will be done with the IPO proceeds.
Yeah. So, as far as the cities are concerned, the whole list is mentioned in the RHP. We are going across. So, there are 4 or 5 centers in the north part of the country, 2 or 3 in the west, 2 or 3 in the east, 4 or 5 in the south. These have not been randomly chosen. These have been chosen according to their birth rates, the affordability of the population, the sale of infertility drugs in that population. So that is how these centers have been chosen, and they are diverse. So they will have major metros like Chennai and Kolkata, whereas they will have smaller cities like Vizag and all these places as well. Tier 2 is also our focus, because it's a myth that infertility is confined to the metros. There's significant infertility tier 2, tier 3 down to the villages, and that is why the hub and spoke model that we follow works beautifully.
Could you give us a little bit of visibility as of how will you manage your margins and profitability for the investors in the next few quarters? What can be the expectations?
Yeah. So, we spent a lot of time creating a foundation. 16 years of hard work, 16 years of journey has been in making these SOPs and making this asset-light model, attracting medical tourism. So what we've done is that we've reached these sustainable EBITDAs and PATs despite opening 7 hubs and 26 spokes, because, we are asset-light. Spokes invite zero infrastructure costs. Second, we are 97% B2C driven in an industry which is largely B2B driven. So we are not paying any heavy professional fees to doctors. We are not star doctor dependent, so all our doctors are employed people. So since the base model is going to remain same and the foundation is strong, so we do not see much changing, and historically we have shown that in the last 3 years when we were expanding, the EBITDAs and PATs have sustained.
So talent availability as per your RHP also says that is an issue. Going forward, how will you manage while you scale to get good doctors and also maintain the success rates?
Excellent question. So, what Gaudium does is that we train our own team. So we do look at a set of, for example, let's say I'm going to a city of Pune. So I'll look for a good gynecologist there, qualified, who has the minimum qualifications required by the 2022 ART bill law, and an embryologist or a nurse accordingly. But we do not depend on somebody having 15 years of experience, because then they're less flexible to be trained on our SOPs. Our SOPs are giving a clinically high consistent success rate of 58%. We want it to be that high always. And so to maintain that, all our doctors, embryologists, nurses have to undergo a mandatory training at the head office. They have to give an exit exam. Only if they pass the exam, they are posted. Otherwise, we say a bye-bye to them. So the talent pool is something we keep creating along with us. And that is also one of the reasons, the doctors stick to us, because not only do they get annual salary increments, they also get performance incentive if one has outperformed the other. And the most important thing to a doctor, not just money matters, professional satisfaction matters, and they get the freedom to use their medical skills, but within the guidance of the SOP framework. So so for example, my doctor in Ludhiana is the same from day one. My doctor in Srinagar is the same. So that's how we retain the best pool.
Alright, so that's the conversation coming on the recent listing, but shifting focus and moving on with the Ask Profit show. Chetan is calling us from Bengaluru. Chetan, hi, very good morning to you. I believe you have a question on Apollo Microsystems.
Yeah, good morning everyone. I have a Apollo Microsystem 250 shares. I bought it 119. So I wanted to know long-term view on that.
Okay, Avinash.
I can hold it for 5 to 10 years.
Sure, Avinash, 5 to 10 years is the horizon that Chetan is looking at for Apollo Microsystems, already sitting on profits of around 30,000 rupees. would you recommend a hold on this one?
Yeah, I think he can continue to hold for the next 2 years. See, I think defense companies' premature nature is that the more you hold, I think value can be compounded. And I think the company in which the investor has invested is already in the money. But I think looking at the next 2 years, the kind of order book visibility, the kind of scalability this company would grow, I think definitely he should hold on for the next 2 years to get a better alpha.
Right. The next query is coming from Somashekar from Bangalore, and he wants a short-term view on Tata Steel. He has around 100 shares bought at a price of 181. Rajesh, your view when it comes to Tata Steel?
So definitely an outperformer, and it's continuously moving in a higher top, higher bottom structure. I mean, I suggest him to continue to hold on to it. We are expecting a move towards the levels of around 225 to 240 levels. On the downside, he can keep a trailing stop loss below 204, which is its 20 EMA, which is getting, I mean, every dip towards it, it is getting bought into. So keep a stop loss of 204, and on the high side, keep a targets of around 225 to 230 levels.
Okay. All right. The next question that we have is on Bombay Burmah Trading Company. K. Anand from Hyderabad is asking this question. Wants to know if fresh buying can be done at the current levels. Rajesh, would you recommend that?
So I would suggest him to avoid. I mean, we are seeing that bounces are getting sold into around 200 DMA, and overall the structure remains negative. But if in case it dips towards the levels of around 1550 to 1500, there we see a strong support of 200 weekly moving average, and also the last year's swing low. So as of now, wait. But if it dips towards 1550 to 1500 levels, that would be the ideal levels to enter longs.
Next query is coming on, is a caller query coming in from Pavitra. Pavitra, you can go ahead and ask your query.
Good morning, everyone.
Good morning.
So I want to invest 5 lakhs in any sector which can grow maybe 30 to 40% in 1.5 year to 2 years time frame. So can analysts suggest any few stocks where I can invest?
Okay, Avinash, where would you suggest Pavitra to invest 5 lakhs for long term?
I think from the large cap, I would still say, Mahindra and Mahindra Somit looks to be quite attractive at 3,400. So this could be one stock, and the other stock could be possibly, Anantraj, which has the data center theme. I think this theme is going to catch a lot of momentum considering the noise we are seeing on the AI side. So, these kind of stocks would give a little bit of stability. At the same time, next 12 to 18 months, the runway looks pretty solid.
Okay. All right. The next question is from Sanket, who's writing us from Mumbai. He's asking about Puravankara. He's holding 200 odd shares at the levels of 285. Should I sell or hold from a slightly long-term perspective? Rajesh, what is the view with regards to where charts go?
I mean, it has seen a sharp vertical fall from the levels of 265. And as of now, I mean, further weakness is expected in the near term. So I would suggest him to exit, use any bounce towards 210, 215 as an exit opportunity. The stock prices are likely to see further downside in the near term.
Okay. The next query is coming in from Lata, and it's on IIFL Finance. She wants to know whether should she hold this counter for long term. Avinash, any view on IIFL Finance?
Yeah, I think, Somit, you can hold it for the next 12 to 15 months. Yeah, I think this has been a corporate which has delivered in the past. And I think, looking at the kind of tailwinds going forward, the investor needs to be, of course, a medium-term investor. So continue to hold. Maybe in the short term, there could be a little bit volatility. But next year, I think hopefully if the capital markets do well, most of these financial services companies should do well. So I think continue to hold.
Okay. All right. We've got our next caller. Mohsin is calling us from Gujarat. Mohsin, hi. Very good morning to you. What's your query about?
Yeah, very good morning, ma'am. Ma'am, I have a ONGC share, 2,386 shares at the rate of 285 rupees per share. So what can we do for near term, ma'am?
Okay. All right. I'll take this up with Rajesh then. Rajesh, ONGC, what are the charts indicating?
So we see a strong breakout on the weekly charts, and already the stock has seen a strong momentum after the breakout. We expect the stock to move towards its all-time high levels of around 310 level. So hold on to it. In fact, any dip can be added, can be taken as a buying opportunity. Somewhere around 260 to 265 levels is the breakout zone that would act as a support. And in the near term, we expect a move towards the levels of 310 levels.
So that's the technical view coming in for ONGC. But with that, completely out of time, Avinash as well as Rajesh, thank you so much for taking out the time and helping us answer all those queries. With that, viewers, like I said, completely out of time with this edition of Ask Profit. But do stay tuned. KYC comes up next.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
बिटिया की शादी है हमारी।
बधाई हो बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
साउंड चेक हो गया? विजुअल्स रेडी? लाइट्स ओके? एवरीथिंग इज रेडी? वेट, आर यू रेडी? ये सिर्फ एक कॉन्सर्ट नहीं है। दिस इज माई लाइफ, दिस इज माई स्टोरी। वन नाइट, नो रिपीट्स। बुक योर टिकट्स नाउ।
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What
Hello and welcome to KYC. I am Sharad Dubey, your host and dost, and let's start the show. Very interesting company I have got for you in KYC. It's recently listed, but I'll give you some hints. Try to guess it. The logistics service provider for e-commerce, express parcel and value-added service. We also call them 3PL. This is the new word which we have got for the last 2 to 3 odd years. It's backed by big names. Flipkart, 8 Road Adventures. You must be getting the vibe of a VEPC. Yes, it is largely funded on that. Promoter stake is on the lower side. We'll get you on that. And the other important thing is it's recently listed in January 28, a very limited period where we are getting this company, but a lot of interest coming in this stock. And currently the stock is trading below its IPO price of 124 rupees per share. Well, it'll be very interesting to know which company this is. and I don't want to keep you in the shadow. This time I'm going to give you the answer a bit early. The company's name is Shadowfax. Let's get them on screen. Think ahead. That's the tagline. Pretty much interesting. But why are we calling this company? Of course, there's a lot of interest. A lot of you have written to me for KYC to get in new listed companies as well. But remember, the history would be a bit less and I will tweak the ratings as well. But let's get on the key questions. Why are we actually getting this company here? The revenue margin guidance is very much important because this is still an evolving business model, at least for this perspective, and also on the financials. It is not an old business, it's a newly made business, and now it's moving around the 3PL industry growth rates and the company's market share. Of course, the market share is looking on the higher side, so we'll get in all the exact numbers from the management. Another important reason to call this company on our show in KYC is that any acquisitions plan, generally these companies have a bigger war chest for cash and they might look at some inorganic way of moving ahead as well. Apart from this, also the demand inquiry trends, especially for the B2B clients. Remember, if a CVF cycle starts, which is already therein, it starts benefiting logistics companies. And if we talk about logistics, that's why Shadowfax is over here. What's the growth looking like for both the express segment? Is it actually outpacing the hyper local segment? That's what we'll try to understand. There are these two business segments which the company is looking at. FY27 capex plans, there's already a little bit of moderation in FY26. So that'll be pretty much interesting to talk about this company. And also the new growth engines. There are a lot of key initiatives which are coming in. Same day delivery, larger delivery, luxury delivery, all sorts of things are there, and it makes us, a bit at times, it becomes overwhelming for an analyst to understand so many things happening just for one odd company. But it's possible, it's India and it's the startup space, and that's where the surprise happens. And on the show is Abhishek Bansal. He's the co-founder as well, the CEO of the company, where we will talk with Abhishek on his journey and the company's growth aspects as well. But let's give you some more details about this company. Ye karti kya hai? What does the company do? Of course, about the company, we had mentioned you that it's a tech-led third-party logistics, 3PL, that's the full form. Every time this PL word will be coming, so it's not profit and loss. At least for a logistics company, it's 3PL, it's third-party logistics company in India. Another important fact about this company, it's focused on enabling the digital aspect of this commerce, especially in express logistics. Also, we focus on the asset light model. That's pretty much interesting. It's operating across 15,166 pin codes, and that's a large exposure area. But nevertheless, there is a big scope to grow. Also, India is a big country. 23% market share they have for India's e-commerce parcel shipments. That's a good market share coming in from the base which they have grown the last 3 to 4 years. Express forward parcel delivery is for the e-commerce and the D2C brands as well. So whatever you're ordering from phone, a lot of back-end work is being done by Shadowfax, and that's why it's actually in the shadows, but it's very much prevalent. And look at the big names. I'm sure you must have shopped from all these larger brands, and the people behind it is of course Shadowfax. Also, looking at these clients, it just keeps on going, and these are a part of our everyday life. So this company also technically becomes a good player in that. The reverse logistics, reverse pickup market leader by volume. These are the other products which the company is focusing on. Quick commerce also, it's there. The hyper local, as we call it in these terms. These terms, they might look a bit difficult, but to be honest, this is the startup parlance. So I'll try to explain you slowly what actually this is all about. Same day and next day delivery service. This is where everybody wants. I want something in 10 minutes. Maybe you want something in just a day. That is where Shadowfax comes in. Also, apart from this, these are the hand-in-hand exchange deliveries as well. So these are the nitty-gritties, of what things are happening behind the screens, and that's what I'm explaining you. The revenue model, paisa kaise aata hai? This is called fee per shipment, order delivery. That is how these metrics work. That's why I just wanted to give you that, but I'll show you the revenue. That will be more simple for you, and that's what I'm talking about. The revenue, the top line numbers go up in these type of companies because they are still in their growth phase. That means the growth hasn't stopped. That's why maybe the markets are giving a very high valuations, but we'll come to that. Also, apart from this revenue model, we'll talk about the forward express parcel, how the numbers have changed. This is the growth coming in 8%, and now it's at around 23%. It'll be very much interesting to see whether they can touch the 25 or 30% mark in a month or a quarter. There is
market share picture, of course, is the largest 3PL company for reverse pickup shipments. That's one thing. Apart from that, there are 3-4 other important points. This is the largest 3PL company for same-day delivery. And this segment, we are seeing something much more happening in the entire market. Largest 3PL quick commerce for quick commerce deliveries also. 10 minute, 15 minute, 20 minute. That's what you call. Also, is the operational performance. This is the number, the Q3 numbers I'm talking about. Express is doing better than hyperlocal, but you never know. These models keep changing, the companies keep pivoting, the mindset is startups. So it's a bit difficult for a public player analyst to understand these models, and that's why maybe the markets are not giving the premium which the company might get. This is a very important news coming in. One NCR is the largest automated sortation facility to date. We'll ask more details about it. It's a very recent announcement coming in from the company. The facility is now fully operational. Roughly a 50 crore investment you could talk about, and this is roughly a 2.1 lakh square feet facility in the NCR region. So this is the recent news coming in when it comes to Shadowfax. So पूरा detail आपको तो बता दिया company का, but I'll explain you the ratings, how we go about it in KYC, what are the rating parameters, and remember, to be fair and one of the loved KYC shows we will change some parameters for a company like this, because it's not fair to judge one company with all the same parameters. Of course, the basic things remain there. This is the holy grail. I won't change that ever. But the operational parameters I'm getting, because return ratios is not fair to actually get these numbers right now. Let the company mature in the business model. Shareholding street cat, this is very much important. But remember, it's a very small time period. So you won't get anything on a time basis, time series analysis. So we have to be very neutral on that aspect. Valuations, yes, we'll focus on that. Outlook, this is very much important on the future and the industry. So we'll get you all those details. But right now, let's go into the first rating parameter, and that is the income statement. Income statement, largely, you see the companies like that, the growth comes on the top line. The focus is always on the top line, and they are doing what they are told. The way the model is set up, the PVC funding is there, and that's the growth coming in. Also, if you're looking at the bottom line, so you must be wondering, Sharad, why the profits are not going up? Because company is in a big expansion phase, and just getting path to profitability that the company has achieved, but how much more will it go up? That is something which we'll talk about. But if you're working at scale and the benefit starts coming in, that is where some amount of good upflows can start coming in, and that's little bit of that hint has already started coming in. This is just the Q3 numbers, so I would just like to give you the longer picture. Definitely the path to profitability has to go up more, but look at the moves which are happening in Q3. So that is something which is showing us that the story of Shadowfax is intact, and that margin jump also we saw. Whether this will hold up that 6% margin, that's what we'll be asking Abhishek. But as of now, the story, the movement from Q3, from the lower numbers, at least in the profitability and margins, has gone up. So that is something which I liked. But long-term company needs to prove more, and that's how it's evolving. So let's give it time and give a neutral rating when it comes to the income statement. Balance sheet is also very much important, and largely balance sheet is really well funded, to be honest. And you see the borrowings has also come down. The IPO listing was there a month ago, so not much there. The balance sheet strength is very strong, and even there's 191 crore cash as well. So some acquisition or treasury management is always there. So to be honest, balance sheet is very strong. So I'm going to give a thumbs up when it comes to the balance sheet. But cash flows is very much important also. Logistics industries, at times the cash flows get lumpy, and there is some seasonality impact also. There's a festive season where you get more orders, and let's just see how that has panned out. And I've just taken data till FY25, and largely the data is kind of showing some positive moves here. But remember, this cash flow segment is a bit lumpy. Just to give a benefit of doubt for both the long-term investors and even the short-term traders, at least the cash flow segment is something, even if you could say that you could skip this is fine. It's a neutral rating coming in, not much happening. But nevertheless, FY25 numbers are decent. Let's talk about the operational parameters. You must be wondering, Sharad, where are the return ratios? Return ratios I have not taken. The model is a bit different. So let's focus on the operational part, and that is where my interest is there. Express and Hyperlocal doing really well, and that is something which you should be looking at least for this stage of the business cycle of the company. Let's move ahead. Any other important operational parameters are there? And yes, other segments are also there. Other logistics segments, they are also doing well. So if something is going at an average of 50% plus, that means it's in the right direction. And if it's in the right direction, I'll give a strong thumbs up when it comes to the operational parameter. But let's see the shareholding. Remember, we just have one data itself. The promoters, you don't have so much stake, but remember, there are large investors already there. This is how the model works. FIs, DIs is between 9 to 16%. But if you're seeing public just doesn't only mean the retail or HNI, it also means some large PVC investors who are classified as public. So net, it's a neutral rating. Let's give it more time and see where the institutional money starts moving in here or there. Let's talk about street cred. That's our fourth parameter. It's been flat since IPO listing, that 124, 120, that is where the stock is moving. And let's give it more time, to be honest. This is the price you must be looking at. You must be checking the prices at which you must have entered after the IPO. Or if you have got a IPO allotment, you are still stuck there. It's just been a month, but remember, February has been a very volatile month. Maybe the Q3 numbers are not factored in yet, and there's a lack of analyst coverage also. So that's why I'm here for the KYC show, so that everybody listens, be it the analysts or even the fund houses who really like our show. So it's a neutral rating when it comes to the IPO pricing, or you could say the street cred. But valuations is very much important. Sometimes it's questioned in the higher IPO mispricings from new age tech companies. Sometimes the old investors, old thought process, they do not like that. But at times, of course, as the earnings go up, the lumpiness starts coming in and the normalization happens. But I have taken a peek, in our analysis for this. Shadowfax is at 200 times. See, remember, the profit numbers are on the lower side, but the numbers are numbers, and that's what we are here to give you, that perspective. Around 60 times P ratio is delivery, and Blue Dart is at 37 times. So right now, if you look at valuation, you want to enter the stock, it might not be the right time for you. For this is for some investors who always have some opinions on higher valuations. So for that, I have given a thumbs down when it comes to the valuations front. Let's talk about the outlook. This is very much important if the stock is listed right now 1 month ago, or if the stock is 100 years ago, it has been listed. The most important thing is the outlook. What lies ahead? That is where stock market gives you the valuations and the price movement. One NCR, the largest automated sortation facility, that's coming. That's something which will be very much interesting. Capex might be moderating to almost 4% in FY26. The number was, if I remember, 140 crore rupees. So we will understand a little bit more about it. The diversification growth engines, of course, the quick commerce, time sensitive segments, the luxury segments, the heavy goods segments, are they over diversifying it, or everything is under control? The CV upcycle, will the logistics also start performing because of that? And generally this happens. First CV comes in, then the logistics comes in. So it will be very much interesting for us to check this. This is an industry perspective. But whenever these industry perspective things happen, there's a consolidation always at play. So you might find a lot of mergers, acquisitions coming in, and when the larger players come in, you'll have 2 or 3 larger players actually commanding a bigger market share, and we are going in that industry. So this is very, very much important. As of now, outlook looks very strong for me, the way the company is going up. So it's a strong thumbs up. But let me give you the entire picture of the ratings. We spoke about the company, what the company is doing, what the company will do. But let's give in the ratings, ek revision ho jaye. Income statements largely neutral. Balance sheet and operational parameters are really strong. Cash flows, let's give it more time, and same thing happens for both of them. Valuations, if you're looking at, then certainly not, this is not the company for you. But outlook, the future, that is also very strong. So all in all, on the higher side of the KYC ratings which we give at an average, it's 5 out of 8 when it comes to Shadowfax Technologies. But to give us more perspective, we'll be joined by Abhishek Bansal. He's the co-founder and CEO at Shadowfax Tech. And interesting trivia about him, he's an education from IIT Delhi, and also he has worked with Hay Group as a business consultant. So Abhishek will be joining us, and Abhishek, it's always a pleasure to talk with you. Good afternoon, and a very strong Q3 numbers also has come in. Just want to ask you on your new announcement first before we get into the other details for KYC. Is one NCR, what is this automation center all about, and how does it change a lot? Because in your presentation I've written there's an inflection point also. Now just give us the example, or maybe what does this inflection point mean? One NCR's automation center which has come in.
Yeah, thank you, Sharal. So One NCR is an automated center. We have been building it for the last 18 odd months. It's the largest sortation center today that we have set up. Today, Shadowfax runs close to about 55 sortation centers pan-India. One NCR, what we have set up is a fully automated single-touch center where right from batch sortation to shipment sortation, we are able to basically consolidate all volumes in a single facility in North India and then basically ensure that they are efficiently moved across the length and breadth of the country. What this facility helps us build is an extensive mesh network where more than 50 cities will have direct connections on a national level. Another probably close to 70 to 80 cities at a zonal level will have a direct connection from a single facility. It gives us incredible advantage from a speed, capacity standpoint. Think about it. I mean, we as an organization, our express parcel business, we are the fastest growing logistics player in the country today. Our business is growing at north of 60% year on year. We are at a point where with this kind of a growth, we are investing in some of the futuristic facilities because we believe a very, very healthy growth number is going to continue over the next 4 to 8 quarters for us. What you saw, what you were speaking about market share, we have rapidly gained market share over the last couple of years. We believe in this market, we will continue gaining market share over the next 4 to 8 quarters. And that inflection point is something which a facility like a 1NCR will continue enabling us to deliver on the fastest speed and at great cost.
Abhishek, of course, we spoke about 1 NCR, but will there be other 2 NCR, 3 NCR, or maybe 1 MMR also?
There is a lot more in plans. We will continue to do automations over the next few years. If you look at our historical numbers, close to 55 to 60% of our automations happen within our sortation centers. As a guidance that we are given to...
Right. And Abhishek, when you speak about automation, of course, there's an engineer in you. I'll, of course, ask the second question on AI. And AI, automation, and definitely the space you're working at, how are you deploying that? And do you see this, kind of, big operational efficiency coming in from this? And if yes, will we see that in the next 4 to 8 quarters?
Yeah, absolutely. The guidance that we have given is that every year we'll continue improving our profitability by anywhere between 100 to 150 basis points on a yearly basis. Whatever you're looking at our numbers, it also includes the cost of all this expansion, cost of building some of these facilities. And when you look at our profits, when you look at our EBITDA, it actually includes the total cost of growth as well. So some of these facilities have a very, very long duration of build up. As I said, it takes about 18 odd months to get a facility commissioned. So some of those costs continue to be part of our net profit as we are looking at. Year on year, as we continue to grow, we will see a lot of operating leverage coming in, and one should expect anywhere between, as I said, 100 to 150 basis points of profitability jump every year in our numbers. On your question on AI has become one of the most important elements for us in deploying some of these automations, and that's why using AI, deploying these automations right now gives us a competitive advantage as well. One of the big advantages we have created in our sortation system is dynamically based on the load prediction, you can figure out how many shipments do you want to bag based on direct sortation or indirect sortation, so as to optimize on the cost. And it's a very sophisticated IP-driven predictive model that we have created in our organization using data engineering, using artificial intelligence. We also have created our own mapping system. See, in India, it's very, very surprising. 9% of the customers in India either enter a wrong PIN code or they actually don't even know their PIN code. Looking at address and sending them to the right location using our PIN code fix engine, using our own mapping engine is a huge competitive advantage that we have built over a period of time. It helps us give us a great cost advantage. It gives us a customer experience advantage. Today, we use everything on our own mapping system. We don't use third-party apps. And this entire mapping engine that we have built is built on top of our AI engine that we have internally created.
And Abhishek, let's just give us, the market of 3PL and your market share. It's around 23%, right? So how much percentage the market is actually growing? And of course, you are doing better than market, and that's why the market share gains is coming, at least in the organized space. Just wanted to get some numbers on it. Maybe if you maybe 25 or 30% market share, can we touch that in the next couple of quarters?
Absolutely. We are definitely on track of that. See, to understand our market share and the whole story around it, as you would understand, in India's 3PL space, there are very, very limited players now. It's a fairly complex sort of activity that we have got into. And there's been this place is largely governed by 3 or 4 players. Okay. in this market, one should also understand is that our customers don't want to work with only a single partner. They typically choose to work with 2 or 3 partners because they also want to diversify and ensure that they are able to optimize on the right cost and the right experience by choosing the right partners. What we see is our customers actively diversifying, and with our cost value proposition, with our new age services, with our focus on value added services, customers are loving what we are offering as a tech driven player. And historically, that's why despite being in a competitive market, our market share has grown from 8 to 23%. I think you're completely on. We will continue gaining market share. Assume the 3PL market to grow anywhere between 15 to 18% at a market level. We will definitely be growing faster than that.
Exactly. Right. And Abhishek, the way you are growing, it seems like, a management student in me would think that, hey, let's do a little bit of acquisitions also, something which is around your, circle of competence, or the thing, which will help your business all around. Are you looking at something here? Because I feel like there might be some inorganic acquisitions at play.
I think, just to be honest, we are not actively looking at acquisitions. Our hands are too full, focusing on the core business, be it e-commerce, be it quick commerce. We are seeing very, very high levels of growth in the market right now. Our focus is to double down on the segments where we know we can gain market share, build operating leverage, and convert that operating leverage into profitability, build market leadership in each of the segments where we exist in today, and then think about some of the diversification through acquisitions. We did do a small acquisition last year. We acquired a company called Critical Lock, which focuses on movement of luxury products. But I mean, that's something that we did last year. No immediate acquisition one should expect over the next maybe 4 to 8 quarters.
Okay, so 4 to 8 quarters, I think the entire management and the team is locked in. 4 to 8, 4 to 8, 4 to 8. We have been hearing that. But the new growth engines are also there. You spoke about luxury. You spoke about the heavy industry, the single day product delivery segment. It gets very technical for me and some of our audience also. But the new growth engines, if you can just simplify it, what would that be?
I think the new growth engines are exactly the areas where we are looking to gain market share, where we have little presence. We want to just enable that. Shadowfax started as a service for delivering smaller products. Now we are diversifying and growing up into larger products through the same supply chain. Think about a suitcase or an aquaguard or a large package of diapers. Okay, so that is something that we have got into over the last couple of quarters. Moving forward, we are about to launch white goods as a big category. I think it's a segment which is very, very interesting, where we have very little presence. And typically, when you're delivering white goods, your average realization per order is far higher than delivering a small good. So I think that's a very interesting segment. Using our existing supply chain, how we are enabling white goods in our white goods, furniture, some of the other categories in our business. Same day delivery is something which helps our D2C brands compete with hyper-local services like quick commerce on one side and Amazon Prime on another side. Today's D2C brands want to do self-fulfillment. They don't want to work with aggregators, or they don't want to work with basically some of the demand generators, because they completely kill their margin. They want to work directly with third-party logistics companies, do their fulfillment. With our same-day delivery service, it is today the fastest growing service we have. It is a big differentiator that D2C brands basically get from us. In very, very simple ways, let's say you go to a brand.com website, you're sitting in Mumbai, you're placing an order by 12 o'clock. What we essentially promise is delivery of that by end of day, okay, in your same city. If it is a different city, we'll fly that shipment overnight, deliver it to you next morning. Today, this service is applicable in more than 30 cities. We are the market leaders in doing same-day delivery.
So Abhishek, we spoke a lot about your business, but this is one question I get asked by a lot of my Gen Z folks. They keep writing to me and they want to put a question to you. The question is, someone who is 24-year-old right now looking at you in our KYC show, they want an advice as an entrepreneurship, and if they want to break into your industry, what they should know about?
Well, see, I mean, as a youngster who's probably looking to start something of their own, looking to build their own brand, I think India is in a great place right now with AI coming in, with ordering patterns completely changing, with video commerce becoming really a big thing. Today, influencers generate more orders than the traditional Google and Facebook marketing schemes that we are looking at. I think the thing to focus for anyone coming into this sector, coming into starting their own brand, is probably to focus on some of the new age trends, new ways of acquiring customers, building the right product, creating a differentiated sort of a product which probably was available offline, is not available offline, and then building a brand on top of that.
All right, so that's the mantra. All the young viewers, Gen Z folks listening, do take note of it. He was also once a student and then now he's having a market share of 23% plus. It's always a pleasure to talk with you, Abhishek, on the company and the future outlook ahead. Thank you very much. It's always a pleasure. Thank you. So this is Shadowfax. Of course, 4 to 8 quarters, that's the bullish tone coming in when it comes to even the margins as well. An interesting view coming in if the young folks want to enter into this business as well. Pretty interesting conversation here, but that's all folks for KYC. Stay tuned to NDTV Profit.
बिटिया की शादी है हमारी।
बधाई हो, बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Benchmarks trade under pressure today with Nifty shedding over 180 points. Sensex loses more than 500 points today. Real estate and FMCG are the drag. IT and oil and gas remain resilient. Setback for Amara Raja and Exide. Zimbabwe announces ban on all raw mineral exports and lithium reserves. Africa's top lithium producer wants more local processing and cites malpractices as the reason for the ban. India is set to adopt a new GDP series with 2022-23 as the base year, replacing the decade-old 2011-12 series. The Ministry of Statistics and Program Implementation is scheduled to release the national accounts data based on the new series. That's today. In a major relief to Aam Aadmi Party's leadership, Arvind Kejriwal and Manish Sisodia have been cleared of all the charges in liquor policy case by a Delhi court. Adds CBI's charge sheet lacked evidence. Major escalation in Pakistan-Afghanistan conflict in our neighborhood. Pakistan bombs major cities, which puts the neighbors at open war after months of tit-for-tat clashes. Hello and welcome. You've tuned into Markets at 12 on this Friday afternoon. Let's take a look at the market on Friday. Yes, completely losing steam on the market as well, because Nifty 50, it's inching closer to the lowest point of the trading session today. Remember, it's almost lost 180 odd points, and more than that from the high point of the trading session and 25,300 odd levels. Well, Bank Nifty is also in tow with the key indices, and when we talk about the mid-cap index, the broader markets, that's also down in line with the key indices. Small-cap index is, however, taking a deeper cut. When we look at the contribution, well, HDFC Bank, remember, by rotation, a quasi-investment into the Indian market and the economy. HDFC Bank is the top dragger today, and that's what is coming up. But some of the IT counters are really seeing the recovery, and that recovery trend is continuing. And that particular sector is the only one which is adding some bit of momentum and some bit of green shade on the markets today. So IT sector doing well, but apart from that, most of the consumption plays are really a drag in the market. When we talk about the biggest drags, it's real estate, FMCG, auto, consumption. These are the sectors which are falling the most. When we look at the mid-cap universe also, some of the financials which are quasi-consumption like PB Fintech, Muthoot Finance, these are the ones which are the biggest drag in the market. So that's a synopsis of the market. There is volatility that has been persisting because of various factors, and now that volatility is turning more into weakness as of today. Markets losing stream on Friday. Chakri Lokripriya, who's the Chief Investment Officer of Equities at LGT Wealth, joins us now. Chakri, always a pleasure to welcome you on NDTV Profit. What do you make of the market sentiment that we are seeing today of extreme pressure and weakness?
Thank you. It's always a pleasure to be with you at NDTV. I think, what's happening is it's the geopolitical and the tariff uncertainty. Now, clearly, the good news is, the tariff is somewhere between 15 to 18%, the US tariff. And so that is until the Supreme Court decision is finalized. So which means capex by many companies in India, whether it is textiles, all the export-related companies are going, metal companies, because and auto ancillaries, these kind of companies, for them, the tariff for autos is 25, for metals, it's 50, for textiles, we're waiting to see, and the government has removed some subsidies. And net of all this, companies are going to wait and watch what is the final tariff before they commit to capex. So I think for the next 5-6 months, therefore, we'll have a sideways market.
Chakri, so if there is a sideways market, do you think that there is any pocket of investment for a longer horizon, which now looks like is at an attractive valuation, which could be strategized as an investment theme?
The domestic the proxies, which is basically financials, those are unaffected. They're affected by the broader macro slowdown or pickup. Now, given that 2025 was a very unsettling year and did not do much, I think 2026, with the tariff maximum capped at 18, is much better than 2025. Therefore, incrementally, the Indian economy will kind of improve. And all the past GST cuts, etc., will all start to kick in for the benefit of consumption maybe later on in this year. So given all this, I think, financials and some of the shallow cyclicals like, maybe automobiles, and we're going into summer, so some consumer durables we can begin to look at.
Right, but good you mentioned consumption, Chakri, because this is the sector which demands the utmost importance or attention in today's market, because the biggest drags are really coming in from banks and financials, which are also sometimes the quasi investments for the economy, like HDFC Bank falls on a day of weakness the most sometimes. So apart from these drags, auto, real estate, as well as other consumption, FMCG, these are the ones, and even financial services which are quasi-consumption like insurance as well as gold loan, etc. So these are the ones which have fallen the most and showing utmost amount of weakness. What is the trend and what is the sense we are getting from this kind of a play in the market?
If you divide it into 2 or 3 segments, so basically one is financials. Within financials, PSU banks clearly will benefit the most versus the private banks, because whatever capex which is done by the government will first flow to the PSU banks. For the private capex to pick up, which will again go to the PSU banks, and some of it to the private banks, therefore, again, private banks lag. And third is because the consumer is not yet fully recovered and will yet to enjoy the benefits of the GST, etc. cuts. Consumer spending, credit card spending, those kind of spending which benefit the private banks is likely to be back-ended. On the other hand, in the case of pure consumption, autos have done very well. So there is some amount of profit booking. And in the case of consumer staples, I think it's an incremental volume game. There's no pricing power for those companies largely as a sector. So against that backdrop, therefore, that sector is unlikely to recover anytime soon.
Right. So Chakri, at this point, what would you advise in terms of an investment strategy for medium to long-term play? And if this volatility you're saying or market is going to remain sideways with many of the factors beyond our control in the global arena also having their fair bit of impact on Indian markets, putting all that into perspective, what will be your investment advice? The markets, are they a falling knife gradually, and should it be wait and watch, or should pickup be done, or judicious investments be done at this particular point?
It's clearly moving away from being a trading market. You might get these opportunities, obviously, when channels like yours come and point out individual opportunities, they're always buying opportunities. Now, for the longer term investor, clearly it is a wait and watch game. And since it's the US Supreme Court, tariff, Trump coming in, FTAs between various governments, these are all way beyond our control. And they can also change on a dime. Now, tomorrow, if Supreme Court or the Congress in the US reaches an agreement and the tariff comes up at a particular number, it's all final. Those things can happen very suddenly. So therefore, it's good to be invested gradually. There's no point. I think one can also do a sip across stocks and funds.
Right. Thank you so much, Chakri, for joining us. It's always a pleasure to take your insights on the market. So as we talk right now, 25,300 level that has been lost. Nifty 50 is down more than 200 points and is closer to the lowest point of the trading session at the particular moment. So keep an eye out on the market, but a lot of our market pressure is also because of the global factors. Let's join in Peter Cardillo with his expert take. He's the chief market economist at Spartan Capital Securities and joins us from the US. Peter, always a pleasure to welcome you on NDTV Profit. You heard that Indian markets on shaky ground, also a lot of global factors at play. What is your outlook on the various uncertainties globally? There is trade war, where the uncertainty persists even after the Supreme Court judgment, and the US-Iran tension, and there is some middle ground being sought right now. How do you see this situation impacting global economy and the markets?
Well, domestically, I think we're going to grow somewhere between 2 and 2.25% this year. On a global scale, I think it'll be somewhere between maybe 1.75% to 2.5%. And that, of course, includes China, Europe, and Asia as well. The southeast part of Asia as well. And so I think growth will continue. Of course, there could be some headwinds, and those headwinds could be geopolitical, perhaps interest rates, and of course, perhaps a relocation of assets.
That's right, Peter. In fact, one important development is also how the Federal Reserve in the US now goes forward under new leadership. How do you see the strategy and the vision of the new chief coming in?
Well, if you look back at Kevin Walsh's history, he's been a hawkish, very hawkish. And his concentration has been mostly on inflation. So I kind of think, unless the inflation numbers come down rather quickly, that he's going to take his time in lowering interest rates. He will lower interest rates this year, and that's because I think that the U.S. economy, the labor market, is going to permit that to happen. I don't see the labor market falling off a cliff, but I do see jobs getting. I see people having a harder time in finding jobs, and I think the impact is most likely going to come from AI. It's going to be a very big challenge for the labor market.
Right, big challenge for the labor market. But when you look at India amidst all these factors, Peter, and of course, India is impacted by the FII inflows coming in from the global market, especially US, and also the crude oil prices. How do you see India's economy, and what's the view on that?
I think India is going to do well. I've always favored India. It's a very vital economy at times. Your technology and pharmaceuticals industry should carry the economy to new heights.
Its outlook on India is good, but Indian economy's performance is also dependent on the various geopolitical factors which are impacting crude oil prices as our import bill. How do you see the near-term US-Iran, developments really impacting the global economy and other factors?
Well, we've had a spike in oil prices, not because the fundamentals warrant it, but because of the Iran-US tensions. But another round of talks were just concluded, and there seems to be some progress being made. So I remain in the camp that when it's all said and done, I don't think the United States is going to resort to a strike. I think that diplomacy and some sort of accord where Iran and the United States can basically save face. No one wants to see the price. I can assure you that President Trump does not want to see the price of oil go above $100 and stay there. That would be a defeat in terms of inflation. And I don't think even the oil producers nations want that, because eventually they would come crashing down. And so Iran certainly doesn't want a regime change, and if there's no deal, that's a very good possibility. If Trump has to resort to an attack, those attacks may lead to a serious political situation in Iran, and there's a good possibility that that government may collapse, and there might be a regime change, a new upspring, so to say. And so I don't think Iran wants that. So I think Iran is going to have to make a deal with the United States. They may not get everything that they want, and that goes for the United States as well. But I think some sort of a deal is on its way.
All right, some sort of deal is on its way. So you do see de-escalation in US-Iran tensions for a sustained period. But you did mention job losses as one of the big factors. AI also has a lot of role to play. What is the immediate impact on the US economy of all this?
Sure, absolutely. Well, as I said, the jobs market is not all that strong. It's not all that weak. At this time, it's quite hard to read. We month to month, sometimes we get surprises like the last reading. The upcoming data, which will be out next week, I think will show certainly a jobs creation that has come down from the previous month, maybe by about 40 or 50,000. And so again, it's a market that has to be looked at very carefully. But again, I think one of the problems here is the loss of jobs attributed to AI. In fact, Fed Governor Cook recently talked about the implications of AI, and she basically said, it's good, but we have to really be careful and study and see what the impacts would be on the dual mandate of the Federal Reserve, which we all know is the labor market and inflation. And so in certain aspects, AI could be trouble for the global economy, for not only for the United States economy, but for the global economy as well. And I think that governments have to study it and make sure that it doesn't get to a point where it could destroy jobs. And with technology constantly evolving into new areas, it would rather be difficult to perhaps replace those losses of jobs.
All right, Peter Cardello, thank you so much for giving your insights on all aspects of US economy and the factors which are really impacting the global trends. Thanks so much for joining us. And while we are talking about the US and the global developments, one important deal that is really turning heads is the one for the Warner Brothers, and the Hollywood power shuffle has really taken a dramatic turn over there, more than what we see in our movies, with Netflix officially stepping out of the Warner Brothers deal. Bidding war leaving rival Paramount Skydance in pole position in this particular matter. After months of high-stake talks and also regulatory lobbying, Netflix says that the price tag simply stopped making sense, especially after Paramount raised its all-cash offer to a level Warner's board deemed superior to that of Netflix. With Netflix walking away, the stage is set now for a tectonic merger that could really reshape the entertainment landscape, from HBO to CNN to iconic films franchises. So this is the largest deal that is really taking place, and it affects us also directly. At least I'm a fan of Warner Brothers movies and also a regular watcher of Netflix. So that's the important deal. But while we are talking about the deals, a large deal in terms of government disinvestment taking shape in India. Fairfax is emerging as a frontrunner for IDBI Bank's majority stake, potentially also reshaping the lender's future through fresh capital and also strategic partnership and possible CSB Bank merger. To discuss this further, we are now joined by Ashutosh Mishra, who's the head of research institutional equity at Ashika Stock Broking. Ashutosh, good to have you on NDTV Profit. Because of this,
Thank you.
This news now, the stock of IDBI Bank is over 1.5% up in an otherwise absolutely weak market. What's your sense on this particular transaction?
This transaction was going from a long time, and I think this is the right step. Suppose Fairfax comes and they already have fit and proper criteria qualified because they are owning one of the bank CSB at this point of time. So then the whole process can be completed fast, and the most important things next will be on the pricing and how the deal is structured.
When we talk about this spate of foreign investments coming in and fueling the Indian, banking as well as financial services system, Ashutosh, considering that IDBI Bank has a huge PSU, holding government as well as LIC, how do you see IDBI Bank's shareholders really benefiting from a foreign investor really coming into this? What lies ahead for the shareholders, and in how much time can they really benefit from their investment?
Yeah, surely, given there is a lot of scope is available to improve the operational and other efficiency in the case of IDBI Bank, and this is one of the easiest for the government to do the disinvestment because this IDBI Bank is not governed by the Public Sector Act, different Public Sector Act, but governed by the Company Act out there. So it's very easy for government to do the disinvestment of this. So I clearly see that good value can be emerged, but it will take some time to it. First to complete the merger, what is the pricing, another part, and then how the whole CSB and IDBI, this combination also takes place. Post that, it may be beneficiary for the shareholders of both the banks, but this whole thing will take some time out there, and that's why
right.
We are not. Yeah.
Yes, there has to be a lot of patience when it comes to these kind of large transactions. Very quickly, Ashutosh, any reason, the stock has already run up quite a bit in anticipation of this deal. Does it make sense to invest at this point, looking at probably a 2-year horizon for those investments to really start showing results, or all are baked in right away?
No, it will take time to come out because here it will be double merger get involved. First, it's the acquisition of IDBI Bank, first transaction, and the second transaction is surely RBI will not allow them to run 2 separate banking franchise. So the merger of these two. So a lot more clarity and other thing, and that's why it will this whole investor who want to really ride this whole thing probably will have to give 2.5 or 3 years time to take the benefit of the whole transaction.
All right, 3 years time, that too also assuming that everything else remains same and goes positively. Mergers take a lot of time, and that needs to be also seen an opportunity cost that you also give in terms of that patient capital being really stuck in one particular counter. So that's an assessment that needs to be done. But Ashutosh, thank you so much for your expert take on this particular large transaction that's on the anvil. Now, moving on, an important development when it comes to the mineral resources that are becoming extremely prominent right now. As Zimbabwe really announces ban on all raw mineral exports, we look at the impact on the Indian companies and how it will really affect the global supplies. Varsha is here with a detailed analysis. Tell us, Varsha.
Well, the important point is why we are talking about this, how this is going to impact India. Number one is Zimbabwe exports raw material to China, and China exports processed lithium to India, and hence we have an indirect impact on India. Now, Zimbabwe is Africa's largest lithium reserve holder, exports 1.128 million tons of spodumene in 2025, mostly to China, and the lithium prices jumped globally after the ban announcement due to supply fears. Now ban applies even to cargo already in transit, and ban remains in force until further notice. Now, which are the companies and which are the sectors that will get impacted when it comes to India? Well, talking about EVs, now the probable impact is indirect but maybe significant, because if you see the battery cost forms 30 to 40% of EV cost. So Tata Motors, Mahindra Electric, Ola Electric, Maruti are all the companies which may be impacted. Onto the battery manufacturers, over here Amara Raja Energy and Exide are some of the companies which will get impacted, because higher lithium will lead to higher battery procurement cost and will impact the margins for these companies. So overall, in conclusion, if Zimbabwe restricts lithium concentrate supply, China cost increases, global lithium prices rise, and battery and EV companies pay more.
Right, so that's the impact really coming in, and lithium is an important mineral, remember, for the electric vehicle batteries, and that is a critical thing to watch out for. At the moment, Nifty 50 at the lowest level in trading sessions. Keep an eye out on that, more than 200 points lost, and there is weakness in the market. But out of time on this edition of Markets at 12, but do keep it with NDTV Profit. Thanks so much.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक concept नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen, and he is now bringing his analysis to the show that the market watches.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey standing at the NDTV Profit Market Pit with all the action in the markets today. Sharad, a negative day of trade. We are trading at the market's lowest levels as well, and major pressure coming in. I mean, I was just talking to Jasmeet a while ago, where IT as an index has seen the worst performance since, Lehman crisis in 2008. It's the worst February that the sector has seen as well on a monthly basis as well. Lots brewing.
Well, yes, you see the markets, there's a big sell-off happening here, but kind of you could say that overall support is not coming in. Look at the levels, 25,300 below. That means it's below the 200 DMA levels also. Let's pull up the Nifty Bank to show you how the strength is looking like. And today also, the larger players are not offering major support. There are some hints of, you kind of a reversal happening, but we need to wait it out. But options data is suggesting a different story. Let's pull out the factors for the markets right now, which is very much important. And the most important data for the day is the Nifty has broken down below the 200 DMA. That's 1 month low. The second important factor, of course, why the markets are trading lower is definitely going to be the buy the dip strategy. This can be there if you are having a medium term setup for both Nifty and Nifty Bank. Third important strategy you should be looking out for is that the options data is suggesting a minor recovery when it comes to the overall trade in the day's trade. Also, importantly, the Nifty heavyweights, they are carrying not major contribution, and that's the overhang coming in the markets. There aren't any clear winners. Of course, a little bit of short covering coming in the IT stocks, and that is holding up the Nifty a little bit, but nevertheless, the contribution is not that strong. Major sectors are in losses, but it's in a very narrow range. It's not a very big, stocks are down between 2 to 3% We'll take that volatility in our stride. Capital market and select NBFCs, that's a big drag coming in. This, of course, on the news flow and the overall short setup coming in. But net, we can say, on a medium-term, long-term basis, we are still in consolidation, but yes, a technical breach has happened for Nifty.
Technical breach has happened in terms of Nifty and major sectors seeing that kind of selling pressure. Thank you, Sharad, for that. But let's quickly go through the watch list. Consumption names are under pressure, from a Nestle to a Tata Consumer, HUL, all of them seeing good pressure in today's session. Eternal has recovered after a strong fall. Ultratech down in trade as well, and it's flat over the last 6 months. Maruti Suzuki is seeing selling pressure. In fact, the auto sales numbers will start trickling in tomorrow, so that entire sector is going to be in focus. Reddington, strong moves coming in there, along with the Tejas Networks as well on the back of the supply order. Praj Industries is a volume buzzer along with a Sun TV. SpiceJet has been buzzing on the back of the block deal, and VMart as well on the back of the deal today. Vesuvius, a flat sequential top line, and that's having an impact on the counter. Coromandel has reached a 2-month low, and Apollo Microsystems is seeing pressure along with volumes. Your Bihar-based microfinance companies on the MFI bill are in focus as well in today's session. So that's what the watch list is looking like. But Sharad, over to you to take the rapid fire forward with Ajit Mishra of Religare Broking.
Thanks a lot, Hiral, for that. Ajit, good afternoon to you. Always a pleasure to have you. We'll start a rapid fire, buy, sell, hold. You know the drill. First stock is Eternal. Your views on that?
Seeing recovery, hold.
Okay, the next stock is Ultratech Cement. Brokerages are definitely bullish on it, and if and when that upcycle comes from the cement space, then something to watch out for. Your views on that?
Accumulate on dips, 12,300 major support.
Ajit, your views on Maruti Suzuki now?
Consolidation is more likely. Prefer TVS, M&M.
Well, this stock generally doesn't come in our radar, but today, of course, the volumes have seen some changes. Reddington, your view on that in this cash counter?
Strong rebound, likely to continue the momentum. 260 should be the stop. Can hold for 310.
Another stock doing well in trade, of course, large order wins also coming in. Tejas Networks, that's the stock I'm talking about. Already a good up move has come in last 2 to 3 trading session. Good time to book profits here.
Yes, book partial profit at current levels and trail stop loss at 385 for the remaining position. Book complete around 485-500 zone.
Your views on Praj Industries already last 4 to 8 quarters. If you talk about it, the company has been giving dismal numbers, and the way the US exposure impact is there, that's what we saw in the Q3 numbers. Your view on the technicals?
Likely to form a reversal pattern confirmation once we cross 345. So start accumulating with stop at 300.
The stock is in consolidation phase. I'm talking about Sun TV network. Some movement here. Your views on that?
Yes, a strong rebound witnessed today. Continue to hold with 610 as a stop loss and 670-80 as a target zone.
Ajit, another counter, Vesuvius India. There's of course a CFO appointment also at play, but your views on the stock now?
Looks like consolidation to continue here also. Not much to comment upon, means it's likely to languish in this range of 500 to 550.
Ajit, another seasonal play, Coromandel International. Your views on that?
Coromandel looks still in consolidation. Confirmation above 2400 would trigger the next uptick. So hold with the stop at 2200.
All right. And of course, defense and component play, Apollo Microsystems. That stock is also buzzing in trade. Your initial thoughts on this? What are the key levels to watch out for?
Trying to form a base. Consolidation range breakout will get confirmed above 260 to 65. So hold is the recommendation with stop at 225.
All right. These are the views coming in the rapid fire segment. Over to you, Hiral.
Okay, thank you so much for that. These are interesting names. But very quickly, let's take the Google Trends talks with Ajit Mishra as well, because lots could be in focus on the back of the trends that we are looking at. Angel One, now, broking companies have been seeing pressure since yesterday's day of close post, the commentary that came in from Ashish Chauhan when it comes to the F&O segment. Tejas, we've spoken about, SpiceJet we've spoken about, and Bharat Forge is the new one that we're looking at. Ajit, any views when it comes to Angel One, and if you have to look at any of the other broking businesses along with the Bharat Forge?
So Hiral, Angel One, we are seeing consolidation continuing. It's been almost like 1.5 years now that broadly consolidation in this range of 200 to 340 post this split is what it's trading in. I believe that this kind of sideways scenario might continue until we break 280 decisively on the higher side. So for a short-term point of view, one should refrain from any fresh position. In case if you have any existing bets, 225 should be your stop loss, and use any recovery towards 280 to reduce your position. Other stocks from this space, they're largely again trading with a sideways bias. JM Financials, we saw an uptick of late, but here also we are seeing that selling pressure emerging at higher end, and same hold true for Motilal Oswal as well. So for a time being now, it's prudent to avoid them and let them consolidate and form a base. Bharat Forge, on the other hand, we are seeing steady traction. The stock is at the record highs, but since the last move has been almost like vertical, fresh entry is something that you should avoid at current levels. Wait for some consolidation or a dip towards 1850 to re-enter.
Okay, so that's with regards to where the stocks on Google Trends go. But thank you, Ajit, so much for joining in. Always a pleasure to speak to you as well. But moving on. Capacity Infra, that's one stock that is in focus as well on the back of the order wins that they have been seeing lately. The slew of orders that are coming in have been pretty strong. The stock, though, at the day's lowest levels, and this is in consonance to what markets are doing. Subir Malhotra, whole-time director at Capacity Infra, joins in. Welcome to the show, Subir, and always a pleasure to speak to you. My question coming to you is, with that 537 crore Thane project recently that has been awarded as an LOI, what is the expected timeline, for this one and the Noida project to actually convert into definitive work orders and begin contributing to revenues?
So, frankly, this is not the first package that we are doing. I think we have been consistently performing and getting packages from Raymond Realty in that package of land. For all the buildings that they have constructed till date. So I think we should have constructed all the projects that have come up in the Thane region and now even in the Bandra region for Raymond Realty. So this is a formality of an LOI. I think we have already been told to commence our activities of mobilization at site.
Okay, so that's revenue recognition portion for Thane. What about the Noida order? Will that also be on similar lines?
Yes, so this is one of the esteemed and upmarket projects which Great Value is now launching in the Noida sector. Noida sector, as we are all aware, is now the new booming area as far as NCR is concerned. So this is an up-end construction which Great Value has launched. And I'm happy to say that their first contract in this sector has been given to us. So which collectively, I would say, is a reposition of faith into us of taking almost 1,000 crores of orders in the last 10-15 days.
Okay. When you talk about, the expected commencement date and the stipulated completion timeline, what does that look like in terms of both of these projects?
So the Thane project is supposed to hit ground immediately. We have, like I told you, been told to mobilize immediately. As far as the Great Value project is concerned, mobilization has started. Kickoff meetings have commenced, and we intend to hit site by the 1st of May. Both these projects come in generally with around about a 36 month timeline. Yes, there are some provisions of, NGT, etc., which are additional in the north, but generally this is the timeline that we are operating in.
Okay. And, given this is a repeat order, what specific operational efficiencies or maybe, cost-saving measures are you going to see? Because you have a previous order already in terms of Raymond projects. Anything that you can apply from there to here which will actually help margins?
So that is our biggest advantage of working in a place like Thane, and especially for a client like Raymond's, where we would like to say that there is a complete match of the expectation levels of timelines and quality and safety standards that the client is expecting from us. And so for us, it is just a repetition of the works that we have been doing in the past. And also, as you say, there are operational efficiencies that we will obviously bring into the system.
Okay. And overall, how will the company manage the mixed-use nature of residential retail of this project to ensure that there is specialized resource allocation also going ahead?
No, for us, it's just a simple construction project of an RCC building. And that is not really demanding a lot of additional capabilities as one may ask.
Okay. And Samir, how does this 537 crore order win impact the current revenue guidance for FY26? Because the order book already is very strong from here on now.
So, no, it will not impact the guidance for 26 because we only have a month left. And by the time revenue start hitting, it is actually month 2 or month 3 into the project that revenue start coming in. So, yes, I will say they will definitely have an impact on the Q1 targets of the next year.
Okay, so Q1 targets of next year is something that could see an upward revision. Anything else that you want to add when it comes to the outlook going ahead?
I would just say we are going in the general direction that we have been talking about decent CAGR that we've been earlier talking about.
Okay, so the CAGR growth is going to remain absolutely decent. Thank you so much, Subir, for joining in. Always a pleasure to speak to you. So that's the management of capacity infra. What's interesting over here is that FY26 guidance remains the same, but the first quarter of FY27 could see some bit of a revision on the upwards, taking the kind of orders that are coming in as well when it comes to the execution part of it. But let's also get in a fundamental guest on board. Devarsh Vakil of HDFC Securities joins in. Devarsh, welcome to the show. Always a pleasure to speak to you. I'm sure you've heard the management as well of Capacity Infra, a small company. But any views that you share on it with the kind of order book and execution that they're talking about?
So I'll speak in general. The sector, I think it is on a cusp of a revival. I think we can see in the budget also that government is spending a lot of resources towards infrastructure, affordable housing. And now I see that the private capex is also going to move. Now, in this light, I think companies like Capacite has potential to reward its customers. Execution was muted, but now I think execution is going to pick up this year. Our fundamental research team has a capacity under coverage, and they have a buy rating there. So we also expect growth to continue in this country.
That's an interesting take coming on that. Yesterday, of course, there was a match also, India versus Zimbabwe, which India won. But there is another news coming in from Zimbabwe as well, and I think it's a negative news. Varsha, your view on that?
Well, Sharad, Zimbabwe actually suspended exports of critical raw material and lithium concentrates with immediate effect, and the ban applies even to cargo shipment which are in transit, and no further notice has been given by the country. Now, why we are talking about it? Because if you see, the process is that China buys raw material from Zimbabwe, and India imports the processed lithium from China, and hence we have an indirect impact from this ban. Now, if I want to talk about who will be impacted in India when it comes to which sectors will be impacted, you have, of course, the EV companies, because the battery cost, if you see in an EV, makes up almost 30 to 40%. So you have Tata Motors, Mahindra, and all the auto companies which are going into EV vehicle, which will be impacted. And of course the battery manufacturers, you have Amara Raja and Exide Industries, which will get impacted because higher lithium will lead to higher battery procurement costs, which will impact the margins for these companies. So in short, China's cost will increase, the global lithium price will rise, and hence the EV vehicles manufacturers and the battery manufacturers will be impacted from this ban.
Thanks a lot, Varsha, for that. Of course, some adverse impact coming in from Zimbabwe, but Devarsh, to get you on this, your views on these auto stocks, especially the EV plays, any impact on them we can see going ahead, and if any you had to pick, what would that be fundamentally good here?
So I think this has an implication on the Indian players. I think immediate impact will be the global lithium prices will spike. Last I saw, there was a spike about 5-6% on this news. So obviously what we are seeing is the mad rush towards all these commodities, critical minerals, which we are going to see this battle intensifying. All these countries who have access to resources are trying to extract the extra pound which they can get from all these resources. So if you were to look at a little bigger picture, the last year was about AI, it was about the intellectual properties. I think this year is going to be an important year for hard commodities and critical minerals. And as investors, we also need to switch our focus towards commodities, towards minerals, and try to identify all the beneficiaries.
And Devarsh, the CV play in India, that's also where, like, you could say a bullish sentiment is there. It's a kind of an upcycle we are seeing in. Two names come to my mind, Ashok Leyland, Tata Motors CV. Brokerages have also given mixed views right now. Of course, some views coming that, there might be a good up move going ahead. At times somebody is talking about higher margins, which the companies were enjoying might be impacted. Your view on this, and if you had to pick between both of these stocks, which one would you pick?
Right. So we are positive on autos, especially the commercial vehicles. After the GST cut, we have seen good growth. And I think, as I just mentioned, the domestic capital expenditure cycle is likely to reverse and it's going to boom. So we expect commercial vehicles to do well. So players, large players, which you just mentioned on the commercial vehicle side, will continue to reward investors, and we like them.
That's with regards to where impact on EVs, auto and battery companies goes. But moving on, HUL did make this announcement of a 2,000 crore capex. Now, all this while we were thinking, it's 2,000 crores. Is it going to be as large for a HUL or not? But when you delve into it, you actually understand the kind of importance just 2,000 odd crores holds for a Unilever in terms of their growth story, their capex plans, strategy as well. And that's what Mahima is bringing for us. Mahima, what do you have? This has been the discussion since quite some time. 2,000 odd crores. How do they plan to use this 2,000 crores? What would this actually mean in terms of strategy is the key?
Right. So, as you rightly mentioned, it's not a very big number, but the importance here is that 2,000 crore is a very focused capex that they're going to do, focused investment that they're going to do in the beauty and personal care. Now, what this means is, like I said, it's going to be an investment in a specific segment, that is beauty and personal care. And this is going to be, spread in the next 2 years to boost premiumization. They're going to focus on two things, that is the segment and the premiumization of that segment. And this is, one of the most aggressive capacity expansion in one particular segment that HUL is going to do. So this is what it means basically. Now, in terms of how capex has been over the years, not a focused one, but an overall generic capex, it's been usually in that range of 1.5 to 2% as a percentage of its revenue. These are the numbers in the past 4 years. If you can see, that range as a percentage of revenue has been between that 1.5 to 2.5%. for HUL. This is the generic capex, of course. This time they're going to do a focused one. In terms of what is change in this strategy, now they're focusing on fewer and bigger bets, clear focus on certain segments and certain brands, and presence in premium side. They're focusing more towards and want to grow volume more towards the premiumization side. And of course, volume growth from here on should take off, is the view that is coming in from the commentary from the past 2 quarters. In terms of where the sectors go, or the specific segments that they're keeping focus on, skincare is the first one. Beauty and personal care, of course, we talked about that. Hair care, and in terms of where the other two go, personal care we talked about, and the last one is home care liquids is what they're keeping their focus on with regards to where the segments go. Now, moving on as to what has changed under the leadership of Priya Nair. Focus on volume growth has increased. From here on, they are expecting good volume growth. Focus on premiumization has increased. And lastly, beauty and personal care is going to be the next leg of growth, the next segment where they're going to see growth coming in from. Lastly, in terms of where brokerage's view stand, Nuvama has maintained buy. They're saying that stock price is attractively valued at 44 times FY27 and 40 times FY28. In fact, in the morning, Parag Thakur did mention that HUL has never traded at 40 times forward P. The stock is oversold zone is what Nuvama believes, and the company will see benefit more likely will see more benefit with the inflow coming in the FMCG sector. So that's what Nuvama believes. Lastly, they've also said that going forward, this remains as their buy, and this is the overall view of what's happening with HUL and why and what this 2,000 crore means for the company.
Okay, so this is going to be very interesting. Thank you so much for that. Devash, any view when it comes to HUL? A focused capex that they are talking about. Apart from that, there is some value buying happening in terms of FMCG as a sector over the last couple of days. Yes, there is pressure today. IT is seeming pretty reasonable to a couple of analysts as well. How are you looking at the sector in your view?
So both these sectors, we have been quite cautious over the last few years. Earlier they had a prolonged phase of uneven demand. The consumer sector is beginning to show some signs of stabilization, some recovery. Urban side remains relatively resilient, but because of the rural market where there was a lot of inflationary pressure and muted wage growth, we did not see any volume growth. And the whole theme of premiumization is across the category where D2C brands are actually gaining market share. For particularly this quarter, the price of key commodities like the oils, copra, cocoa, coffee, all these things have come down, and that will have positive margin improvement for some of the FMCG categories. But personal care and other categories are continue to struggle. Unless they have an improved revenue mix, they have higher share in the premium brands, some innovation, will remain cautious here. What we like from this sector is stocks like Britannia, Nestle, the Marico. That's where we see some kind of EBITDA margin improvement, and that's where we are focusing. But overall, we continue to remain underweight on the consumer sector.
So that's with regards to FMCG as a sector. But thank you, Devash, so much for joining in. Always a pleasure to get your views as well. But before we wrap, one stock that I want to discuss or
mentioned is a Mastech. Their UK arm has bagged a 5-year project. It's a 49 million pound project that we're talking about. A marginal spike coming in terms of where Mastech goes from the day's lowest levels only on that back of the 5-year deal that we're talking about as we speak. But it's mainly the UK arm which has backed that one. And very quickly, if we can just get the lines back in terms of Anil Ambani and the summons that he had. He skipped appearing at the Delhi ED office today. That's the latest that we're picking up in terms of the summons that he'd received from the Enforcement Directorate. Anil Ambani has skipped appearing there. What's the ramification? What's the next update is something that we will watch out for as well. But that is a quick update that we're getting you with regards to where Anil Ambani goes. But completely out of time with that, it's a wrap on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you.
Benchmarks trade under pressure with Nifty shedding over 200 points. Sensex loses close to 600 points. Realty and FMCG drag. IT and oil and gas remain resilient. And setback for Amara Raja and Exide as well. Zimbabwe announces ban on all raw mineral exports and lithium reserves. Africa's top lithium producer wants more local processing and cites malpractices as the reason for the ban. And India is set to adopt a new GDP series with 2022 to 23 as the base year, replacing the decade-old 2011 to 12 series. The Ministry of Statistics and Program Implementation is scheduled to release the national accounts data based on the new series today. In a major relief to Aam Aadmi Party's leadership, Arvind Kejriwal and Manish Sisodia have been cleared of all charges in liquor policy case by a Delhi court. The court also adds that CBI's charge sheet lacked evidence. Major escalation in Pakistan-Afghanistan conflict. Pakistan bombs major cities, which puts the neighbors at open war after months of tit-for-tat clashes. Good afternoon, you're watching Lunchtime Trades with me, Shriyanti Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates on the top buzzers at this hour, all while you grab lunch. Let's kickstart the show, but before we do that, let's quickly take a look at the markets because it's actually looking like a bad day coming in as far as the Nifty is concerned, with that about 200 point knock coming in, Nifty hovering very close to the day's low levels as well. When you talk about Sensex as well, you're not looking at a better picture by any means, because it's also the Sensex that has lost over 600 odd points. It's trading near the day's low. When you talk about the sectoral picture as well, let's take a look at some of the sectors that are on the back foot. So there's realty that is leading losses, FMCG on the back foot, and other than that, even auto is on the back foot. What's faring well and comparatively better is IT that is remaining resilient. It's oil and gas also that is remaining resilient. With that in mind, let's quickly take a look at some of the gainers and losers. When you talk about the entire Nifty 50 pack, you in fact have something like a Bharti Airtel that is trading with a cut of about 3%, Dr. Reddy's, HDFC Life, Interglobe Aviations, after that DGCA and notice also coming in as far as this particular account is concerned, Shriram Finance, SBI Life, Nestle India, some of the other losers from within the Nifty 50 pack. And what's holding up quite well is something like a Trent, HCL Tech and Infosys, also trading with gains of about 1.5% thereabout. When you talk about something like an Apollo Hospital, that's also holding up quite well. So is something like an Eternal and some of the other counters from within the Nifty 50 pack in terms of your IT majors. So Tech Mahindra and Wipro also trading in the green, albeit a little bit on the back foot. So that's largely the kind of picture that you have as far as some of these stocks are also concerned. But with that in mind, let's take a look at commodities in terms of the week gone by and get your check going as far as some of the movements when you talk about gold and silver are concerned. Let's take a look at gold first, because you do have gold steadying very close to that $5,200 an ounce level in terms of that safe haven flow. So that's been largely the story when you talk about gold prices. Yes, volatility has been the name of the game when you talk about gold and silver. But still, despite the mild pullbacks, you do have prices emerging strongly in terms of that weekly gain coming in. So that's largely the kind of picture that you have when it comes to gold. When you talk about silver as well, it's holding firm around that $88 to $90 range thereabout. Prices are stabilizing after the January rout as well, and that's something that you're looking at when you talk about silver as well. But when you talk about this volatility, largely that's also still persisting when you talk about the silver market. So largely that's the kind of move that you have coming in as far as some of your top commodities are concerned. With that in mind, let's also connect with our guest this afternoon. Dinesh Samani, founder of Pro IntelliTrade Services, joins us on the show. Mr. Samani, a very good afternoon to you, and thank you so much for taking time out and joining us. First things first, it's been quite the volatile week. When do you see the dust settling when you talk about gold and silver? Because you do have mild pullbacks that you've seen. Largely the kind of movement that we've seen is that every time that prices sort of move forward and in good stead, there's a pullback that you see.
Yes, definitely. We have seen a good and a decent pullback in the prices of gold and silver. We've seen the low of 43.80. From there, it is almost trading around $5,200. As far as COMEX is concerned, Since last 4 weeks, COMEX gold is showing a weekly gain, so that's also a good sign. Overall, in last 8 to 10 days, what I could see is it is trading in a very narrow range of 51.30 on the downside, where it's acting as a support, whereas 52.20 it is acting as a resistance. If I look at silver, $85 was holding for quite a long time. After it crossed 85, it went up to 91.30. It's steadily trading around $90. So overall, I see a broader picture. If I look, prices of gold are more or less in a very narrow range of say $100 to $110. While silver, I look at it from $85 to $92. Unless and until prices move past that $92 mark, I don't see a major up move in silver as far as the COMEX silver is concerned.
Absolutely, but what kind of levels are you exactly looking at when you talk about the next 3 months? Is there any level that you're looking at as the key support level when you talk about silver?
Yeah, definitely prices have bounced back from the 74 level marks quite a bit time, but it is wrestling around $94 to $95. So overall, if I look at the broader picture, I see $100, $102 max on the upside. Downside, I see $74 should act as a baseline support.
No, absolutely. And I also wanted to put the spotlight on that entire route that we saw coming in the month of January, because we're just about wrapping this month. I wanted to get a check going for our viewers in terms of the context, in terms of the month also gone by. Now, when you talk about silver and gold prices, you did have silver hitting that $121 an ounce level, thereby also declining 31%. It was a record decline that you saw coming in. Do you think that that entire dust, that entire volatility and those concerns have largely settled? Or are you looking at a little bit of a concern there when you talk about silver?
I see more of a consolidation now. The major rally has been already passed out. If I look at January 2025 from there, in Indian terms, the prices were trading around 86,000. From there, it moved up to 4,20,000, almost 4 times in a year time. And if I look at COMEX, from $50 to $121 is almost more than double. So I think the major rally has already happened. It has taken place. The volatility will shrink days ahead, and I see more of a consolidation as far as silver prices in domestic as well as international market is concerned. In the domestic market, if I look at MCX prices, 2,92,000 would be the major resistance, 2,25,000 would be the support. I think prices should consolidate between this broader range for the next 1 or 2 months.
Absolutely. And Mr. Somani, how are you looking at the month gone by when you talk about gold as well? Let's just also put that into perspective before we move on to other commodities. Because, you know, you did have that $5,600 an ounce level roughly being reached. After that, you did have quite some decline coming in as far as gold is concerned. Now, of course, gold is a much bigger asset in terms of market cap. So the route that you saw was a little bit limited when compared to silver. But just the fact that there was such a route when you talk about gold is quite the concern for traders as well. Do you think that that concern, that worry on the trader front has really settled in when you talk about gold as well?
As far as geopolitical tensions are concerned and the tariff are concerned, I think gold would definitely will try to move further. If I see a broader range, the $5,600, which was the high we've seen in January, from there the prices collapsed almost by $1,200 to $1,300, and it almost tested $4,380. From there we've seen a decent pullback, and we are very just close to the all-time high of $5,600, just $400 short of that mark. So we have seen a sharp up move in gold prices compared to silver. If I look at the COMEX gold and silver ratio, which was at times 80-82 mark, it went down to 40 level mark, and then the strong pullback towards that currently 57 mark. So gold is definitely showing a strong strength compared to silver, and we expect gold prices to even move further from this level. So overall, if I see 5130 should be the good support, that buying level. Upside could be anything around 5480, 5400 levels. So I think gold would be a better bet for the next quarter compared to silver.
Absolutely, all that sparkles is going to be gold, looks like, and that's the kind of sense that I'm gathering from what you have to say also. But let's also shift focus onto oil, because when you look at the last 2 weeks thereabout, you're looking at those 7-month highs thereabout, and that consolidation really coming in. There's a lot of volatility, of course, still at play when you talk about Tehran and Washington. And there's a lot that still remains unanswered when you talk about oil prices. But given the kind of factors that we have, how are you looking at oil prices?
Mostly geopolitical tensions are the major reason for the pullback in the crude oil prices. We have seen in MCX prices were close to 5200 level marks. From there, it moved almost by 800 points to 6,000 levels as of now. If I look at the international market from $58 to $65, it's stabilizing right now, but technically the charts look bit stronger. And we have seen the higher highs and higher lows, which indicates a steady and uptrend in the crude oil prices. As far as the MCX levels are concerned, I think 5800, 5820 should act as a good support for the next 15 to 20 days, while the upside 6120 should be the major resistance level. We expect buy on dips. That could be the strategy, better strategy. Anything around 5900, 5850 should be the good buying level. 5750 should be the stop loss for the long-term levels. Upside expecting a price around 62 and 6450 levels.
Absolutely, and when you talk about copper as well, I quickly wanted to shift our attention to that before we're done. We wrap up this conversation because there's also copper where you've seen quite some strength, or at least some semblance of strength coming back in terms of the entire week gone by. How are you looking at this particular development, and what kind of levels are you watching out for when you talk about copper?
Yeah, being an industrial commodity, definitely follows silver more or less. Prices have moved up quite a bit in the last 2 to 3 months. In Indian MCX market, we have seen prices move up from 1920 levels to 1480 levels. Then a sharp correction in line with the silver prices stabilizing around 1140, 1160 levels. I think the momentum is slowed down a bit for quite some time. But anything around 1180, 1200 levels, that would be a good opportunity for a long-term investor. Upside is still intact. We may expect prices to move to 1320, 1340 levels in a short span of time. 1140 should act as a major support zone.
Absolutely. And Mr. Somani, before I let you go, the conversation would be amiss if I don't ask you which commodity out of the ones that we've discussed thus far are you most bullish on? Because, of course, you do have some of the brokerages that are quite bullish, looking at somewhere close to $6,000 an ounce when it comes to gold, but don't want to be influencing your decision here. Which are the ones that you're looking at, and which is the one commodity that you're most bullish on right now?
Definitely, we've seen since last 25 years, gold has given a return of 15% on an analyst basis. So I think the best commodity to bet on is gold as of now. Gold would be a better performer in the next quarter compared to any of the commodities. My second bet would be on the crude oil prices.
All right then, thank you so much for taking time out and joining us this afternoon. So there you go, all that sparkles is gold, and that is also the word coming in from Mr. Somani in terms of the outlook going forward as well. Thank you so much for taking time out and joining us. With that in mind, let's quickly take a look at the crypto tracker for this week, because in terms of the week gone by, you do have the Bitcoin rebounding sharply towards that $78,000 zone as well. And you do have spot demand turning positive after months. In terms of critical support levels, you're looking at about $60,000 as the major level. Major resistance, of course, is capped somewhere close to 82,000, which seems like a little bit of a dream right now, because you do have that record run that is really broken when it comes to crypto. But when you look at the last 3 months, let's get a check going on that as well. You do have Bitcoin that has dropped from 89,000 to about 60,000. So you do have a volatile crash, like I mentioned, that drove that deep market correction as well. And you're looking at a bunch of things. So 60,000, in fact, is repeatedly holding as the macro floor. 82,000 is the ceiling that is blocking every single major rally. Now, what you're looking at is that volatility is also the name of the game here. In fact, since October highs, when you talk about Bitcoin, you've seen that record 126,000 level coming in before crashing. About $19 billion liquidations triggering steep October fall as well. And that's something that you're looking at when you talk about crypto. That's the entire crypto tracker for you this week. But with that in mind, let's also shift the spotlight back to gold and silver, because you do have SEBI that has changed how gold and silver ETFs are valued, moving away from London reference prices and also shifting instead to domestic spot rates. In fact, Nimit Dixit is joining us with some more details when it comes to this one. Nimit, over to you.
Hi, so yes, the SEBI has changed the way your gold and silver ETF is going to be valued starting April 1st. Now, why it's done this is because so far gold and silver in India, both physically and then of course going into the ETF, were valued based on the London system and the London rates. Now, this meant that once gold was imported to India, then a lot of premiums, taxes, customs, GST, and then the premiums charged by all the different funds meant that there was a lot of difference differentiation in pricing going forward, and this affected the way Indians purchased ETFs. There was no uniformity. To ensure this uniformity, SEBI has now turned to Desi valuation. It's going to anchor gold and silver ETFs according to domestic stock exchanges. Now, what this means for investors is that in the short term, you might see slight price changes, but not a lot. But in the long term, it means clear, consistent standards and prices at which you purchase gold and silver ETFs.
Absolutely, and that's something that we're looking at in terms of the latest development coming in there. Thank you so much, Nimit, for getting us all of those details. But let's also shift focus, and speaking at the post-budget webinar, you do have PM Modi emphasizing that the need to improve bond market liquidity and introduce new financial instruments in India's debt market is something that they're looking at. Adding to this, you do have PM Modi also stressing on bringing foreign investors back to the Indian market with these new reforms. Let's go across and listen in to what else the Prime Minister had to say.
साथियों, हम फॉरेन इन्वेस्टमेंट फ्रेमवर्क को और सरल कर रहे हैं। हमारा प्रयास सिस्टम को ज्यादा प्रेडिक्टेबल और इन्वेस्टर फ्रेंडली बनाने का है। हम लॉन्ग टर्म फाइनेंस को बेहतर बनाने के लिए बॉन्ड मार्केट्स को और ज्यादा सक्रिय बनाने की दिशा में भी कदम उठा रहे हैं। बॉन्ड की खरीद और बिक्री की प्रक्रिया को आसान बनाया जा रहा है। साथियों, हमें बॉन्ड मार्केट रिफॉर्म्स को लॉन्ग टर्म ग्रोथ के एनेबल्स के रूप में देखना होगा। हमें प्रिडिक्टेबिलिटी सुनिश्चित करनी होगी, लिक्विडिटी को गहरा करना होगा, नए इंस्ट्रूमेंट्स लाने होंगे और रिस्क का प्रभावी प्रबंधन करना होगा। तभी हम सस्टेन फॉरेन कैपिटल आकर्षित कर पाएंगे।
Other than that, right there is the word coming in from the Prime Minister in terms of simplifying foreign investor framework as well. But with that in mind, let's take a very quick break on that note. More news and updates on the other side.
First India tour in your city. Rag on with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
साउंड चेक हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What
Welcome back. Thank you so much for staying tuned into Lunchtime Trades. It's time now to get you some analysis. Then this quarter's earnings season shows a clear divergence when you talk about companies accelerating on revenue and profit growth and those seeing multi-quarter deceleration as well. Domestic-focused businesses continue to hold firm while export-linked sectors. Now, those are the ones that are feeling the impact of weak global demand, tariff-related disruptions, and even margin compression. In fact, Jasmeet is standing by with all of those details.
Well, thank you for that. If you look at the overall Q3 as a picture, it was one of the best quarters in last 12 quarters, and that's what the performance showed of most of the companies. So what we have done is we have pulled up 10 such companies, 5 which have shown a good growth in revenue on YY basis over last 4 quarters, and 5 that has shown degrowth in terms of the PAT overall on YY basis. Let's quickly go through the first set of companies that have shown a good growth. Well, first on my list is Jubilant Framework. If you look at the overall performance of this particular company, the company has seen a good growth from a negative -3%, has grown up to 43% of PAT growth on YY basis. Then we also have Polycab, we have Persistent, Max Healthcare, and Home First Finance has seen a good growth in the range of 30 to 40% in terms of the PAT on YY basis. Now, while if you look at the overall draggers, like what's helping the company grow in terms of all these companies, let's quickly understand the growth drivers. For Jubilant Pharma, we have the Domino's expansion leading the overall growth. The company has grown 10% in this quarter, and most of it is led by the Domino's expansion by the like-for-like store growth. If you look at the next aspect, that's Polycab India, the growth is led by the wire and the cable segment, and the GST boost and the government capex is driving the overall growth in the company. That's why the positive upmove in terms of the overall growth of PAT. Well, thirdly, it's Persistent Systems. The company is investing heavily into AI, and the overall AI growth is something that's helping the powering the momentum of this particular stock. While third one is Max Healthcare, while the company is seeing a growth momentum in terms of the overall unit and the brownfield ramp up, which is boosting the profitability of the company. And lastly, I have Home First Financials. For this particular company, we do see a strong disbursement and continued capex, which is helping the company grow. Now, let's quickly understand the valuations. Where does this company stand in terms of the valuation as the return potential? So Jubilant Food stands at 108 times its overall PE valuations, while the return potential is 26%. And the highest among the top 5 is Persistent, while IT has seen a huge downturn in the month of February, down about 20% and that's why we see the return potential Persistent standing at 40% Now, in terms of the overall valuations of Home First, it stands at 4.2. This is book to price ratio of the company. Now, let's quickly understand the next set of 5 companies which seen a degrowth in terms of overall PAT performance. We have Concord, which has grown negatively in this particular quarter, while we have Concord Biotech, Kotak Mahindra, Croptom, and as well Axis Bank, which has seen a negative growth. So they have moved in from a positive up move in PAT to a negative in the current quarter. Now, what has led to the impact in terms of profitability and where the company is facing the issue? Let's quickly understand that. For something like a Concord, the overall export-import softness and the global uncertainty is something that's dragging the company's PAT down, and even the high depreciation cost is impacting the company. While secondly, if you look at the other company, we also have, which is Concord Biotech, while the US tariff has hit all the healthcare and the IT companies, and that's what dragging this particular company as well. The EU supply issues and as well as the overall tender delays in terms of the trade ramp up. Well, thirdly, we also have our next company, that's Kotak Mahindra Bank. What we see is here the low-cost deposit pressure and the liquidity volatility is something that's dragging the company's performance. While we also have the next company, which speaks about the overall Crompton Greaves. What we see is the overall commodity price inflation, where the margins are reducing and even the PAT is getting impacted. While lastly, we also have one more banking company, that's Axis Bank, where we see the overall wholesale lead is taking the mix, and over the CASA ratio is impacting the PAT, and that's why we see a downtake. Now, lastly, let's quickly understand the valuations of these companies and what's the return potential of all of them. If you look at the return potential, the highest in the company is Crompton Greaves, where it's 27.8%. These are the companies which have seen a negative growth in the PAT over last 4 quarters. While in terms of valuations, they all stand at mid-20 to mid-30 valuations. And for bank, we have taken price to book, where the Axis stands at 2.9, which is very cheap compared to the Kotak Mahindra at 11.48%. So all in all, we do see a mixed set of numbers here, but Q3 was a strong upbeat for all the companies.
No, absolutely, and thank you so much, Jasmeet, for getting us that roundup. In terms of the earnings story that you're looking at here, in terms of the accelerators and the decelerators here, but let's also shift focus onto Uber then, that is accelerating into autonomy. From self-driving vehicles in Dubai to electric air taxis, preparing for launch. You do have NDTV's executive editor, Auto, Siddharth Sharma, checking out how the company is really shaping the next wave of mobility.
What we witnessed here in Dubai was a test flight of that. That is a vertical takeoff aircraft that will be used as an air taxi in Dubai to cut down commute times that take hours into just mere minutes. The partnership with Uber will define the next step of mobility, and prices, as they say, will be very similar to what you pay on Uber Black.
Dubai will be among the first global markets expected to see a commercial rollout of Joby's air taxi in partnership with Uber.
Joby Aviation is a California-based aviation company that has built this. This is a vertical takeoff aircraft that's beginning passenger operations later in the year 2026.
Joby's aircraft can carry 4 passengers and a pilot, travel up to 160 kilometers and reach speeds up to 322 kilometers per hour. Flown by a certified commercial pilot, it offers a remarkable way to travel above the city and experience the next generation of flight. Joby's aircraft uses 6 tilting propellers to take off vertically before transitioning into a forward flight. In 2021, Joby acquired Uber's Elevate division, and in 2025, Joby acquired Blade's passenger businesses, which flew more than 50,000 passengers in the year 2024.
So we're launching here in Dubai in 2026. We'll be in the US next. We've got New York, we've got LA, but we're looking at London and Japan, and of course we have India, and just the amazing opportunities there as well. So we spent 15 years designing this aircraft. A lot of it is the very first principles around safety. You'll notice that it's got 6 different propulsion units. If you compare that to a helicopter, you know it's got 1 rotor, right? So this has a lot of redundancy, far more than others, so that when we launch later this year, people can be assured it's safe.
Being an all-electric aviation vehicle, the rotors on this one are also engineered to be super duper silent. So this is very non-invasive. The decibel levels are also super low, and when they fly all over the city in the future, you will not hear them that loud in the skies.
Uber and Joby plan to integrate air taxi mobility services directly into the Uber app, allowing users to book electric air taxi rides seamlessly in the future.
As EV mobility expands from roads to the sky, the Uber model is also evolving and having those multiple layers when it comes to mobility and transportation in the future.
Alright, and that's all that we could pack for you on this edition of Lunchtime Trades. From me, Shriram Singh, as well as the entire team that put this show together. Thank you so much for tuning in.
First India tour in your city. Rag on with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade. So what's on the show today? Firstly, we'll be speaking with the management of Artemis Hospital. Now, the company plans to scale up their capacity by nearly 3.5 times over the next 4 to 5 years. So what's the plan here? How are they planning to do this? And what will be the growth that we could see going forward is something that we'll be discussing with the management on the show today. Secondly, it's Fusion Finance. Now, that stock is down nearly 6.5 to 7% in trade, and this is largely post the Bihar MFI bill was passed yesterday. Now, Bihar accounts for nearly 17% of the company's asset under management, and this is having a sentimentally negative impact on not only Fusion MFI but also other microfinance companies. But Fusion Finance is something that we'll be discussing on the show today. Zilio e-mobility. Now, that stock has been gaining for the fourth consecutive session. It's up nearly 30% in the last 4 sessions. What could be the potential reason behind this kind of a surge coming in for Zilio e-mobility, despite the fact that broader market continues to remain weak, is something that we'll discuss on the show. Then it's an interesting company named Citurgia Biochemical. Now, the stock has jumped up nearly 3.7 times in the month of February. The stock relisted in February 9, and since then we have seen a surge of nearly 3.7 times. But what does the company do? What's their business is something that we'll discuss on the show. And lastly, when it comes to Go Fashion, that stock had hit a 52-week low in market in intraday basis today. And if you look at the last 7 trading sessions, the stock has declined in nearly 6 of them. It has declined nearly 15% in the last 7 trading sessions. So that's also something that we'll discuss on the show. Firstly, if you look at the markets now, the Nifty is down nearly 200 points in trade. Very weak trading session is something that we are seeing. It's trading near to 25,300 level, which is below its all key day moving averages, below its 50, 100 and 200 moving averages. Apart from that, if you look at sectoral wise, other than Nifty, IT among the major indices, all other sectoral indices continue to trade in red. As you can see, Nifty Media and Nifty IT are the only 2 major sectoral indices which are trading in green. Apart from that, Nifty Real Estate, Financial Service, FMCG, all down more than 1% in trade. Even when it comes to the Nifty Small Cap Index, it's down nearly 1%. But what are the specific counters that have been buzzing in trade today, Mahima?
Somit, I'll start with some positivity at least. I'll start with what's doing well in the broader end of spectrum, that is the small cap space. Of course, the index is down 0.85%, but defying that, there is Foseco, which is up almost 12%, followed by something like an Awadh Sugar, which is doing fairly well, up 8% as well. Godavari Bio Finery is also doing fairly well, up almost 7%. BL Kashyap, Camlin Fine is also doing fairly well. All of these counters, in fact, up in that range of 6%. Yasho Industries, Dhampur Sugar, as well as Rajeshri Sugar, all of these counters in that range of 5% is the kind of gains that they're seeing. In fact, sugar as a pack is doing fairly well. There's Bajaj Hindustan Sugar also which is doing fairly well, up 4.7%. Magad Sugar as well doing fairly well. Polypex Corp, yet another day of good gains coming in for this particular counter. But on the flip side, counters that are under pressure today. Fino Payments is one of them, down by about 9.8%. Renaissance Global now today is seeing profit booking down almost 16%. Jindal Poly Invest is also down around 8%. You have something like a Fusion Microfinance, Utkarsh Small Finance Bank, as Somit was earlier mentioning, seeing downtick of around 5% each. Sadbhav Engineering is also down by about 5%. BLS E-Service is also down by about 5%. DE Development is also seeing a downtick of around 4%. Dishman Carbogen, Fed Bank, Shopstop are some of the other names that are under pressure, down by about 4%. So these are some of the names in the small cap space that are under pressure, and that's where the broader end of spectrum is concerned. But as promised, let's welcome in Devlina Chakravarti, the Managing Director of Artemis Hospitals Group, joining us now. Devlina, thank you so much for taking all the time. My first question to you is, I was just going through, the meet takeaways. You are targeting to break into top 5 Delhi NCR areas. Just want to understand as to what is the kind of target that you're looking at, what is the kind of bed capacity addition that you're aiming there, and then from there on, what is the kind of revenue run rate that you're expecting?
So thank you, Mahima, and thank you for this opportunity. So as you are aware that we are at an inflection point when we are looking to grow to becoming the top 5 players in Delhi NCR. We are confined to this region, and we are looking at a whole range of green and brownfield projects. And we have a lot of headroom for debt, but more importantly, we have also been given a nod by the board for a 700 crore raise, which hopefully by May, June, we should be in a position to close. Both in terms of QIPs and prefs. So this is, and as we speak, we have a large funnel of good hospitals in the green and brownfield zone, which is going to be price effective, because I don't believe in paying too much to acquire an asset. And as you are aware, we have just announced our South Delhi assets, which is the Vimhans Artemis piece, with 650 beds getting operational by 2029. We have one asset outside of Delhi NCR, which is Raipur, which is another 300 beds, which is coming out to be becoming operational by May of this year.
Right.
Apart from that, we are looking at bed strength of 2,300, if not 2,500 plus in the next 3 years. With the finalization of some of the assets.
Got it. Can you help me explain as to how the bifurcation between greenfield and brownfield is going to be like for you from here on for the next, let's say, 1 or 2 odd years?
So it could be for the next, it depends on the opportunity as we speak, and the funnel that we are looking at. There are, 50% green and brownfield. So we will come back to you with more details. Definitely, we are more inclined towards a good brownfield asset, which is cost effective. But then there are very promising greenfield projects where the price of land is actually a steal in areas where there are no big players in Delhi NCR. So we are going to be gauging it very carefully, and we will come back to you once these assets are finalized and are pretty much under our belt.
Okay. You're planning to increase your bed capacity to 2,500, I believe, over the next 4 to 5 years. Currently, it's around 700. So that's a jump of nearly 3.5 times. What is the kind of capital expenditure that you envisage that will that the company will incur? Be it acquisition, be it greenfield, say over the next 4 to 5 years?
So, our organic growth, our 700 beds in Gurgaon will go up to 1,000 beds, out of which 100 beds we have gotten it free because of a platinum rating that we have gotten from the environment. Balance 200 is through the extra FAR that we are buying. And the additional 1,500 beds in Delhi NCR, the cost per bed that I look at an average is 70 to 80 lakhs per bed, which is far lower than what today a bed is for. So it is, so there are trust lands, there are areas where a distress asset sale or a distress sale of land, we are looking at all of that to acquire, and the numbers would be typically around 70 to 80 lakhs per bed.
And the overall capex would be around?
So the overall capex would be in the range of almost 1,800 to 2,000 crores, which is going to be between debt and equity.
And equity, which means
as you see, all these assets are phased for the next 3 years, and on the books, the company has cash in the range of every year of 175 to 200 crores. So that will also, through internal accruals, debt, and through equity, is what we are looking at.
Equity means you will be raising fund. Any ballpark number that you could share with us?
So I did mention that we have got a nod from the board for a 700 crore raise through QIP and PREF. And we will closer to the date decide how much of this we actually require and how much could we service it through the debt and our internal accruals.
Devleena, what is the kind of RPOP that you are aiming at, let's say 2 years down the line? How is that going to progress? What's the kind of growth that you're aiming at?
So, as you are aware, though we are not the most expensive, we are actually very moderately priced, but we lead the RPOP numbers in Delhi and NCR at 83,000 is our RPOP. And that is also because of a large number of international patients that we service. 30% of our revenues are through the international patients. And as we speak, the numbers are only growing up with the push on medical tourism and the countries adding on to our list every year. That number we see continuously growing. So going ahead in the next 2 to 3 years, all I can say is we will be one of the leaders in the RPOP numbers, because we will continue our growth with efficiency and with quick turnaround of the beds and a sizable number of high-end surgeries and international patients. So that will be the drivers for a continuously growing RPOP.
Any ballpark figure that you would like to give us for your RPOP?
Well, that's hard to say currently, but definitely our current range will be maintained, if not better. We have shown a 4 to 5% increase in our RPOP year on year, and that will be our endeavor.
Right. The Raipur facility, I believe it has around 300 bed capacity. By when will this be commissioned?
This is getting commissioned in May of this year, 2026.
And
yes.
What could be the incremental top line that you are expecting when this gets commissioned, say in the third quarter?
So we are first year we are looking at an incremental top line of 90 to 100 crores in 11 months. I'm not talking about because we are going to get operational in May, so it will be net 11 months. So we're looking at 90 to 100 crores of top line in 11 months.
Devleena, you are for your new hospitals, you're targeting an ROC of around 18 to 20%. What is the occupancy going to look like?
See, currently, of course, our occupancy here is close to 70%, but we are looking at a very realistic to a slight pessimistic occupancy of around 62 to 63% when we talk about the ROC, but internally we would like to better it.
Just now on a broader picture, we have got all the minor details given the fact that you're looking to increase your beds, you're expecting RPOP to be on the better side. Overall, if you look at the revenue CAGR, say for the next 4 to 5 years, what is the internal target that the company is working with? At what rate will your revenue grow?
So the revenue year on year, what we have shown is a growth of between 15 to 18% year-on-year growth on the revenue. And it will only, with acquisition of Brownfield and when the top line just get merged. So we are hopeful to move in that direction and better it in the next 3 years. So at least 15% is minimum, and depending on the closure of assets, it would go anywhere between 15 to 18% on a year-on-year basis.
Okay, all right. Devleena, thank you so much for helping us answer all those queries and of course taking out the time. We look forward to speaking to you once the Q4 numbers are out.
Thank you.
All right.
Thank you.
All right, so that was the management of Artemis, of course. With that, let's also welcome in Gaurang Shah, Senior Vice President at Geojit Investments, joining us now. Gaurang, a very good afternoon to you. Your quick view on Artemis and, of course, the entire hospital space.
Thank you so much for having me on the show, Mahima. A small disclosure that all recommendations that I'll be sharing with you this afternoon on your show, they are part of our fundamental research team recommendations from a long-term point of view. Our company, Geojit or I, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might have their investment interest. So we don't have coverage standalone on Artemis, but we are positive on the sector. There are three names that we are positive on in this healthcare. And let me stretch this a little bit forward. You know, in this budget, the Honorable Finance Minister spoke about medical tourism. Last year in the budget as well, Honorable Finance Minister Srimati Nirmala Sitharamanji did refer to medical tourism. Most of the frontline or strong companies with strong balance sheets in the healthcare sector are going through a lot of capex. Either they are expanding their existing facilities or they are taking over smaller players with weak balance sheet. So, and as you were talking to the management of Artemis and the verbatim that the management has given, the future looks very, very strong in terms of scalability and service. We are positive on Apollo Hospital, we are positive on Fortis Healthcare and Max Healthcare. These are the three names that we are positive on. And my sense is that not only in India, but I think people traveling from abroad for medical treatment in India is going to go up significantly. And that is going to open up a lot of opportunity for healthcare sector.
Right. Shifting focus to the F&O market, the overall market continues to remain on the weaker side. But let's get in Sharad to understand how is the F&O setup looking like.
All right, since the last time we had come at 1045, the technicals which were there below those key moving averages, that still holds a little bit of respite for Infosys and Trend, but largely it's a sea of red coming in. There's no major support coming in from banks or even Reliance, and also putting the pressure on the Sensex. Let's look at BankX, and the story remains the same. There's no major contribution happening. All three major banks are in the red. Stock specific moves, let's see what's there. Long build up, Dixon Tech and Oil India. That's a good move coming in, but Dixon Tech interestingly above the 10,500 mark. Let's look at the short covering candidates, and this includes Kalyan Jewellers and KEI Industries. Small spurts, narrow range, and long unwinding also the story remains the same. But short build up, of course, the story is on the important side. Bandhan Bank, that's down 3.5%. The Bihar MFI impact is definitely coming in this angle also. And the capital market plays, that's what we had stated in the morning also. Angel One also down almost 4%. So, of course, more shorts actions are there, but largely the sentiment is negative in the F&O space.
Rightly said that the Bihar MFI has been impacting multiple banks and NBFCs, and one counter that stands to get impacted is Fusion Microfinance. The stock is down, or was at least down nearly 6 to 7% in trade. So what has happened here is that Bihar Microfinance Institutional Bill 2026 has been passed by the Bihar Assembly. Now, legislation specifically targets individuals, partnership firms, companies, societies, trusts which are actively involved in providing micro loans and small loans within the state of Bihar. Now, to avoid excessive over leveraging, it states that not more than 2 MFI shall lend to the same borrower. And do remember that Bihar is one of the largest, or is the largest state when it comes to the MFI industry. The total Bihar AUM stands at close to 45,500 crore rupees. Now, this was as per the second quarter of FY26 data, which is the latest data which is available, and that constituted nearly 16% of the overall MFI AUM. So, one of the largest state when it comes to the MFI industry, and hence this impact that is coming in. Now, if you look at companies that have, or banks and NBFCs that have exposure to Bihar, Utkarsh Small Finance Bank has the largest exposure. 45% of its AUM is exposed to the state of Bihar. IFL 21%, L&T Finance 17%. Fusion MFI has an exposure of 16.7%. Asirvad Microfinance, which is a subsidiary of Manappuram, that has an exposure of 13%. Ujjivan Small Finance Bank 11% exposure. Satin Credit Care, AU Small Finance Bank, and Credit Access Grameen have an exposure of anywhere between 5 to 9%. But Fusion Finance having an exposure of 17% is down nearly 6% in trade. But what brokerages are saying. Now, Citi is of the view that this bill is explicitly exempting the lending operations of bank and NBFC. So there won't be any direct impact on banks and NBFCs of this bill, but there could be an indirect impact. And what they're saying here is that multiple lending or adverse shift in repayment behavior stemming from cultural influences could have an indirect ramification on banks and NBFCs, and hence this sentimentally negative impact coming in on the entire NBFC and the banking space. When it comes to Morgan Stanley, they believe that the MFI industry has seen a recovery in asset quality and gradual pickup in disbursements in recent quarter, and this development could create an overhang on investor sentiment towards the industry, if not any actual impact. So it's very clear that there won't be much of financial impact. It's just sentimentally negative, and hence we are seeing this downtick in all the NBFCs and the banking name. Gaurang, getting you on this, how are you looking at this bill that has been passed by the Bihar government? Do you expect any major impact to come in disbursements for these NBFCs going forward?
So, again, this is, we need a little bit more clarity, isn't it? Because whether the regulation that has been passed in the parliament or by the state government is restricted to the unorganized sector. And, Bihar does have a well-known fact that the way the procedures are adopted by lenders of unorganized sector when it comes to recovery, they are very, very harsh. We had one instance earlier also with one of the listed entities. Out of the names that you flashed on your screen, there are 3 names on which we have a fundamental coverage: L&T Finance, AU Small Finance, and Credit Access Grameen. And I think all these 3 companies have a relatively lower exposure to the state of Bihar when it comes to their loan book. Having said that, all those companies which are having higher exposure, with a caveat that we need clarity whether this new regulation is going to take each and every lender into consideration and limit it, or whether there is going to be any specific in terms of listed entities and unorganized players. And when it comes to unorganized sector lenders, we all know some of the treatments that they use for recovery is very, very harsh. There are cases of, suicide, etc., etc. We've read about such reports in various media. So I think it was an appropriate step. My only thing is we need clarity whether organized players and unorganized players, which one does it have an impact on?
All right, Gaurang, thank you so much for that view, of course. But the other stock that we're putting spotlight on is Zelio E-Mobility. Now, the stock has continuously gained in the past 4 sessions and has gained almost 30%. We have Jasmeet joining us to give us more details as to, of course, what the company does and what is going on. Jasmeet?
Well, Mahima, thank you for that. As rightly it is, the stock is in focus on the back of the recent manufacturing unit news. Now, let's quickly understand about the company's stock performance. If we look at the stock got listed in October last year at a premium of 11%, while since then the stock has surged nearly 89%, and currently the stock is down 45% from its 52-week high. So we see a lot of volatility coming in the stock performance. Now, in terms of the last 4 sessions, as rightly said, it's up 30% in trade, and today also it's at 10% high. Now, in terms of what the company does, well, company operates in the business of manufacturing and assembling of the EV vehicles. They produce 2-wheeler and 3-wheeler EV vehicles. And among the market players of Ola and Ather, this is the only company that's a profit making so far. Now, in terms of the other outliners, we see that the company has achieved 3 times its growth when you look at the 25 figures, reaching at roughly a compounded growth 84 times. Now, talking about the recent news, well, the company announced a 2-wheeler and 3-wheeler manufacturing facility in Odisha, given the demand they see in Odisha market. While the company also remains positive about the expansion in West Bengal region, given the new facility will help them cater in the eastern part of India. Now, in terms of what this facility will help the company to, it will reduce the logistical cost, also increase the span and improve the supply chain efficiency. Lastly, if we look at the margin profile of the company has seen a good expansion of margin. In 23-22, they had a margin of 8% and in the recent year, the margin moved up to 12%. So we see a margin jump of 400 basis points over last 2.5-3 years, and the company is well profitable as well.
Okay, all right. So that's Jasmeet, of course. Thank you so much for that. Gaurang, any view on this particular counter?
Well, Mahima, we don't cover it, but a word of caution that when it moves circuit to circuit, one needs to be a little bit careful in terms of what the delivery is and what the valuations are.
Gaurang, you would be quite amused about the next counter that we'll be discussing today. And the company name is Citurgia Biochemical. I believe that the company got relisted back on February 9th on the stock exchange. It's only BSE listed company, and since then the share prices have moved 3.7 times. Now we have Varsha joining us. In fact, she was the one who pointed out that the company has actually no business, and despite that, it has moved up 3.7 times. Let's get in Varsha with all the details.
Well, in the last 12 years, the company has no revenue but expenses, and hence have shown losses in the last 12 years. And there's a reason for that, and also there's a reason why you're seeing that buzz in the stock. Well, starting with, this company manufactures citric acid, which are used in your food, drugs, and soft drinks. Now, the key observation, because this is where the important is, one is the company is listed and active, but operational revenue, if you see, is nil. Even the company is in losses since last 12 years. Market cap is disproportionately high versus the operational activity. Now, historically, this company has been a citric acid producer, but recent filings shows almost the operating losses that the company has been through. So, zero revenue in the last 12 years, negative EBITDA, and losses in the last 12 years. Now, even for Q3 FY26 numbers also, you see company has zero revenue. Now, why? Because the operations continued to be suspended throughout the year for one of their facilities, and there was a lockout declared at Rishikesh factory with effect from September 2003. I mean, since then, the company has not done any business, and hence no revenue and only losses that the company is going through. Now, still, why the stock is in focus now? Because if you see, the most shares, almost 99% of the holding is by promoter, which leaves very few shares for the public shareholding, hence no free float, and hence you are seeing there's a huge demand and no supply, and hence the stock is up. Now, the low float stocks, if you see, easily hit upper circuit. So the kind of rally that you're seeing is not because of fundamentals, but because of the no free float available, and hence the stock is up. But there's no business into this company since 2003, which has been stated in the annual reports since last many years.
I'm pretty sure you must not be tracking this company, but what would be your advice to investors in such situation? Quickly, if you could give us your view.
Well, I would not even touch the balance sheet, honestly, to be very honest with you. And as Varsha was saying, and I was reading on the slides that you were flashing on your screen, 29 lakh is the loss on the balance sheet. Virtually nothing there. And I think Varsha mentioned that promoters are holding 90% plus. I think these are multiple red flags. And I would also say that this is a classic case of pump and dump, given the low free float. Honestly, there is nothing in the fundamentals. Then why on earth is the stock rallying? Purely because of the cornering of shares by the promoters. And as and when, according to their whims and fancies, they would take it upper circuit, they would take it lower circuit. And in this particular situation, you will have some very naive, gullible traders who would eventually have the courage to possibly do something in this counter. I think we will really appreciate if the authorities and the regulators pull up these kind of companies and promoters who are doing such mischief in the market, to be very honest.
Gaurang, makes complete sense. Thank you so much, in fact, for that view coming in. And of course, taking out the time and helping us with all those views on the small cap stocks that we discussed today. But with that, viewers, completely out of time on this edition of Small Cap Buzzers. But do stay tuned. Ask Profit up next.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories.
You're watching Ask Profit, the afternoon edition here at NDTV Profit. I'm Mahima Vachajani and with me is Somit Sarkar. But before we move on to all the queries that you have for us on the show today, let's take a quick look as to how the markets are doing. The Nifty 50 is down by about 0.6%, 150 points of a downtick is what we're seeing. Since we started, the small cap buzzers, it was down by about 200 odd points, so 50 points of recovery is what we're seeing on the Nifty. The Bank Nifty also trading around 0.5 odd percent lower at that 60,800 odd levels. Let's try to pull up the heat map to see as to what are the counters that are buzzing in trade. You have HDFC Life now losing the most ground, 2.5% of a downtick. Bharti Airtel, followed by Bharti Airtel, down 2.5% as well. And Interglobe Aviation and Dr. Reddy's are the other two counters that are down by about 2% each. Something like a Shriram Finance, SBI Life, Bajaj Finserv, Kotak Mahindra Bank, Nestle, Tata Consumer are also under pressure, down by about 1% each. But on the flip side, Infosys now is topping that chart, up almost 2%, followed by Trent, HCL Tech, Apollo Hospitals, Eternal, Geo Finance. So IT names as well as something like a Trent and Eternal are doing fairly well. That's as far as the Nifty 50 is concerned. Let's try to pull up the sectoral heat map. Largely, except for the Nifty IT and Nifty Media, now I think we're seeing Nifty Consumer Durable as well as in the green. But energy has also picked up 0.3 odd percent. And PSU banks almost flat, but those are the counters in the green. But realty is losing ground for sure, down 1.6%, followed by FMCG, which is also down by about 1%. Defense seeing profit booking, and Nifty Auto also down by about 1 odd percent. Let's quickly pull up the mid cap 150 and the small cap 250. The broad end of spectrum also equally under pressure. The mid cap 50 right now is down by about 0.5 odd percent. The small cap 250 down by about 0.6 odd percent. So that's with regards to where the markets go. With that, let's also welcome in our guest for the day. We're joined by Mr. Chokkalingam, who is the founder and MD of Economics Research, and we'll also shortly be joined by Ruchit Jain, who's the Vice President, Equity Technical Research, Wealth Management at Motilal Oswal. Mr. Chokkalingam, the first question that we have is from Anuj, who is writing us from New Delhi, asking about Afcons. He's bought 395 odd shares at the levels of 380. He wants to know your view on this one.
Yeah. After a massive fall, one can consider, but however, I want to caution that, these kind of businesses are going through a difficult time in the stock market, but fundamentally quite decent. With a P is only around 18 and stock also corrected a lot. So considering its a recent track record, one can buy for medium to long term.
Next query is coming in from Shriram Raghuraman from Chennai. He's holding 90 shares of Max Healthcare at an average price of 38 rupees. He wants to know what's the view for the next 1 year on this counter. I doubt whether 38 rupees would be right, or he's, I guess he means Max India. I'm not sure about the price, but he wants to know the next 1 year outlook when it comes to stock Max Healthcare. Mr. Chokalingam, what would be your view on Max Health?
See, Max Health, whether you take a P ratio or you take a enterprise value per bed, it is extraordinarily overvalued. But then, it leads in the pack. It has got a good momentum. And most important fundamental development is that they have got a very aggressive plan to double the number of beds. So with a little risk, I would say it's a hold for medium to long term.
Okay, all right. So that's the view coming in. We've got the next question, which is coming in from Madesh, who's writing us from Tamil Nadu, wants to know if this is the right time to buy Wipro. Ruchit, hi, a very good afternoon to you. Would you recommend that?
Yeah, hi, very good afternoon. Well, I would still recommend to keep a wait and watch approach. First of all, the IT sector as a whole has not shown any signs of bottoming. And within the sector also, Wipro has been one of the stock which had shown underperformance recently. So I think still no signs of bottoming out. So avoid bottom fishing over here.
The next or our first caller query for the second half of Ask Profit is coming in from Pune. Mr. Gupta, you can go ahead and ask your query.
Yes, please. Hello.
Yes, Mr. Gupta, we can hear you. Please ask your query.
Sir, I am holding 1,440 shares of Eicher Motors.
Right.
1440.
And you want to continue holding this counter? You want to exit? You want to book profits? What is it that you want?
I can continue holding. And price is 150 rupees approximately.
Okay, so you have been holding it for a very long time. Mr. Chokalingam, should he continue to hold these shares or book profit? He's sitting on a handsome gains of more than 1 crore.
Still one can hold long-term investors because, there is a structural shift towards high end of the bikes in recent years. And Eicher Motors is a beneficiary, and performance also quite consistent and steady growth is maintained whether in quarterly basis or annual basis. Slightly stretched trailing PE around 40, but then I think it deserves that kind of premium. So I would give a hold recommendation.
Okay, all right. So hold on Eicher Motors is the view that Mr. Chokalingam has. The next question is also for you, Mr. Chokalingam. This is coming in from Satyan. He's asking if he should shift from Shalby Hospital to Artemis Medical. We just spoke to the management, in fact. Would that be something that you would recommend?
I am not in a position to talk on these two stocks because of my personal, the insider trading policy.
Okay, and so then, overall perspective on, the hotel space, if you can give any perspective.
See, hospital, I am extremely bullish because hospital sector is the one which attracted more than 50% of the FDI in the recent years and continue to command a lot of, inflows. Second, a lot of acquisitions are also continuously happening in the hospital space. So, and also it is not going to be affected by AI. It's a domestic demand driven. So I am very, very optimistic on quality, small and mid-sized hospital stocks.
The next query is coming in from Ashish from Orissa. He's holding 300 shares of DCB Bank bought at a price of 116. He's currently sitting on a profit. He wants to know whether should he increase his position on this counter or continue to hold this for the next 2 years. Mr. Chokalingam, any view on DCB Bank?
See, it is trading at almost one-time price to book value, so one can hold because most banks are trading, above one-time book value, except central bank. Otherwise, 1.1 to 1.2 is the lowest range. So at least 20% upside is possible from the current price. So I would give hold and even buy on decline DCB Bank.
Okay, all right. So that's the view on DCB Bank. But viewers who are tuning in, you can give us a call on the number that's flashing on your screen up there. And of course, also WhatsApp us your queries. The next question is from Srujana, who's writing us from Hyderabad, asking about Astra Microwave. 40 is the quantity and 1015 is the average price. She's saying that she had lost, but it's recovered in the past 1 week. Should I hold, sell or average? Ruchit, what would you recommend?
I would recommend to continue to hold on the existing positions. In the recent correction, the stock has formed a good support base around 860 to 880 zone. And till that is intact, the downside now seems to be very limited from here on. So hold your existing positions and wait for a breakout about 1020. If once that is taken out, then you can expect a good short-term momentum in the stock.
The next query is coming in from Afreen from Hyderabad. She wants to know whether is it a good time to buy Rupa clothing for the next, for long term. Mr. Chokhalingam, any view on this?
One can hold periodically, it gives a decent return. So current price, one can hold it for medium to long term.
Okay, all right. So that's the view on Rupa & Co. The next question that we have is on Maharashtra Bank. Manul from Delhi is asking this question. He wants to know if there is any chance that this will go to around 66 in a month, and current buying price, does it make sense? Ruchit, your view?
Well, the overall trend for the stock looks quite positive for Bank of Maharashtra. Of late, we have seen good volume started picking up in the stock. Now, the 20-day MA is around 69 rupees. So there's a major support on any kind of dips that should act now. So I think if you have existing long positions, you should hold on your and continue to ride this trend.
The next query is coming in from Sridhar, and he wants to know which stock is best to buy, MCX or Karur Vysya Bank. Mr. Chokhalingam, fundamentally, which one would be better, MCX or Karur Vysya Bank?
Which is the first bank you mentioned?
MCX. It's MCX or a bank, that is Karur Vysya Bank.
Oh, a very unique comparison, commodity exchange with the bank. I would prefer Punjab National Bank if somebody wants to make money in the banking space. Commodity exchange at this price, I am not very comfortable. So Punjab National Bank is giving me a lot of confidence.
All right, we've got our next caller. Meghna is calling us from Bengaluru. Meghna, hi, a very good afternoon to you. What's your query about?
Good afternoon. I'm holding Kim's shares, 50 shares at the rate of 707.
Okay.
So this is for 1 year time frame. So I want to know if I can continue in the same stock or can shift to any other healthcare stocks or hospital
Okay.
stocks.
Okay, got it, Meghna. I'll take this up with Ruchit. Ruchit, from a 1 year perspective, is this stock looking attractive on the charts, or any other counter in this space that you are liking currently?
Yeah, I think overall hospital space is looking positive, where we can expect some good returns over next 6 to 12 months period. And within the entire hospital space, I think two stocks are looking good. One is Apollo Hospitals and second is KIMS itself. So I think can continue to hold on if you have a 12-month time horizon. The sectoral move should be positive from here on, and Apollo and KIMS, these are two stocks where technical structures are looking quite bullish.
The next query is coming in from Savio. He's a long-term investor, can hold for the next 1 to 2 years. He wants to know whether at the current level, is Praj Industries a good buy? Mr. Chokhalingam, any view on Praj Industries?
Tactically, yes. Fundamentally, even after the crash, it's slightly stretched in valuation. And I also have a extraordinary belief that once some resolution found for political conflict in Iran, possibly in Ukraine also, the oil price will crash in a very big way. So medium to long term, it's quite risky for a Praj industry at current valuation. So tactically in the short term, yes, one can get 10-15% return.
Okay, Satish Kumar is asking the next question. He's holding 25 shares of Gokuldas at the levels of 815. Should I hold, average, or exit at a loss? Ruchit, your view on the charts?
I think overall it seems to be into a consolidation phase going ahead. Overall, the textile space did see some news-based moves, but the follow-up move is still missing over there. I think some more time-wise correction or consolidation can be expected in the near term. 550, 540 is a good support zone for the stock, whereas 850 is a resistance zone. So look to exit on pullback moves rather than exiting at current levels, because we have already seen a bit of correction over last few days. So if you get any pullback move again towards 800 and above, then take a review to exit over there.
The next query is coming in from Kalpana, and it's on Aditya Birla Real Estate. Mr. Chokhalingam, she's holding around 200 shares, and she's saying that she doesn't find any strength in the balance sheet, given the fact that the company's debt has been increasing and they have been incurring losses. So should she still continue to hold this counter or exit?
One can, sell this. I would prefer some player like Ovra Realty or even DLF to AB Real Estate.
The next question is from Rajesh, who is writing us from Noida, asking about Vikran Engineering. He wants to know if we can average out from a long-term perspective. Mr. Chokhalingam, your view?
I have not studied this in detail, so I'm not able to give any view.
Ruchit, any view on this one?
a clear low top, low bottom structure since some time, and no signs of trend reversals. The pullback moves which come in between does not witness any kind of good volume action. So I would suggest to avoid.
Okay.
Right. We have a live caller coming in.
Mansingh is calling.
Mansingh is calling in. Mansingh, you can go ahead and ask your query.
Good afternoon, sir. I'm holding control print shares.
Okay.
60 shares at average price 780.
Okay.
Should I continue to stay invested in this counter for 2 to 3 years?
And you
or
can
should I
stay
shift
invested for long term?
Yes, sir. I can stay.
Okay.
If you want to shift, if I wish to, there is need to shift, can I shift to KP Energy Limited?
Okay, Mr. Chokhalingam, any view on control print? Should Mr. Mansingh continue to hold this counter for long term?
One can. Its only problem is top line is growing, but margin under pressure. But it has got a good track record in the past, so one can continue to hold control print.
Okay, all right. The next one is from Navneet, who's writing us from Hyderabad, asking about Allied Blenders. He's got 8 shares at the levels of 653. Hold or sell is his question. Ruchit, your view on the charts?
I would recommend to exit low top, low bottom structure in the recent pullback move. The 50 DMA is acted as a resistance. So technical structure does not look to be that positive. So can take an exit.
The next query that is coming in from Deepak from Bangalore, and it's on Indraprastha Medical Corp. He's holding 35 shares at a price of 600 rupees, currently sitting on a loss of 6,000. Should he continue to hold this for the next 1 to 2 years? Mr. Chokhalingam, have you tracked this counter, Indraprastha Medical Corp? I believe it's a subsidiary of Apollo Hospitals.
Yeah, I have tracked it for more than 1 or 2 decades. Apollo has some significant stake in it, joint venture with the government. One can hold, particularly after the massive fall, because it's a continuously a growth stock, and the PE also very comfortable now. As I mentioned, positive on hospital stock, so one can hold Indraprastha Medical.
Okay. All right. The next question is from Umesh, who's writing us from Delhi. He says he's bought Bharti Airtel at the levels of 1934. Is it a good hold for the next 1 year? Ruchit, on the charts?
Recently, we have seen some correction. So it seems that stock would go into some sort of consolidation phase or time-based correction. I think if you have a short to medium-term perspective, then I think the stock could see some sideways movement only. So I would recommend if you see any kind of pullback moves again towards the 2000 mark, then you can look to take an exit.
Where is coming in from Subramaniam from Navi Mumbai. He wants to know whether can he invest in Tata Chemicals. Mr. Chokha, any view on Tata Chemicals?
I would avoid at the current price and valuation Tata Chemical.
Okay. The next query that is coming in from, he hasn't mentioned, okay, his name is Natraj and he's bought few shares of Nuvama Wealth, 20 shares at a price of 1,369. He wants to know the short-term view on this. Ruchit, any view on Nuvama Wealth?
Short term, the stock seems to be into a consolidation phase. 1200, 1180 is a good support on the downside. But on pullback move, 1350 is the immediate resistance. So it does not seem that we would see any kind of trended phase in very near term. If you look at last few trading sessions, the volumes have also reduced significantly. So expect some consolidation to continue.
Okay, we've got Ram Prasad calling us from Mumbai. Very good afternoon to you. How can we help you?
Yes, please. I have purchased 50 shares of Procter & Gamble Health Limited, PGHL.
Yeah, got
and the share price was 6,100 per share. Now the price has dropped too much. What should I do? Should I continue to hold and hope for a turnaround, or what is your advice on this?
Okay, Mr. Chokhalingam, I'll come to you on this one. What's the view like on PNG?
Yeah, in fact, just a couple of hours back, I also got attracted as this MNC is trading close to 52-week low.
Yeah.
But the biggest problem is growth is missing, near stagnating revenue. But one can continue to hold it. I would not dare to give sell call because this is a solid parental support is there. It is quite possible to come back to growth path. So one can continue to hold.
Okay. The next query is coming in from Rajesh from Noida. He wants to buy Phenolics Industries. He wants to know whether is it a good price to enter this counter. Mr. Chokhalingam, the query is for you.
I prefer Phenolics cable. In fact, Finolex Industries has about 15% stake also in Finolex Cable. I prefer Finolex Cable because it's still down 40-45% from 1 or 2 year high, Finolex Cable, and industry is a solid growth story, and there's a lot of cash, more than 2,000 crore of free cash the company has, and valuations are very, very attractive. So I prefer Finolex Cable.
Okay, Lata is asking the next question about Parag Milk Foods. She wants to know if this is the good time to buy, and if yes, what could be the right price to enter this counter is basically her question. Ruchit, your view?
So as of now, no signs of trend reversal. Major support, if I look on the bit longer term charts, then it comes around 160 to 180 zone. So maybe if you get some more dip towards 180, 160, then you can take a review over there.
Queries from Narayan, and he's holding around 30 shares of SBI at a price of 1,023. Should he continue to hold or book profits? Any view on this, Rajesh? Ruchit, sorry.
Continue to hold on. No signs of trend reversal since last 2 quarters.
The next query is from Navneet from Patiala. He wants to know which could be a best bet in the data center space, L&T or Anantraj. Mr. Chokhalingam, any view on both the counters? Which one should he enter?
See, in terms of conservative approach, I prefer L&T.
Okay, all right. So that's the view coming in on L&T. The next one is from Tej, who's writing us from Ireland. He's asking about IHCL and whether he can take a fresh stake into this one from a long-term perspective. But Ruchit, the current levels, do you think he should make an entry?
I think buying with a gradual approach could be a good idea. Buy some quantity at current levels and keep some room that if you get any dip of about 7 to 8% from current levels, then you should add more at low levels. 650, 640 is a good support zone for the stock.
Next query is from Nitin from Gurgaon. He wants to know whether is it a good time to consolidate Jio Financial Services. Mr. Chokhalingam, any view on this counter?
I continue to maintain aggressive buy recommendation on Jio Financial. It is trading at 1 time price to book value, so which according to me is quite attractive.
Okay. All right. Pramod is calling us from Bengaluru. Pramod, hi. Very good afternoon to you. What's your query about?
Good afternoon. Actually, I bought IRB shares at 49 rupees.
Okay.
Now I'm at a loss of 25,000 rupees. Actually, I bought 3,300 shares. So should I average it, or can I expect a turnaround for this?
Okay. Ruchit, any view on this particular counter where charts are concerned?
The trend is not positive. So when the trend is not good, better not to put fresh money to average out. On any pullback moves we are witnessing, the stock is not able to surpass this 200 EMA, which is now around 43, 44. So take pullbacks as the opportunity to exit and invest this amount somewhere else rather than averaging.
Okay, Ruchit, thank you so much for that. Of course, Mr. Chokhalingam as well. Thank you so much to both of you gentlemen for taking out the time and helping us answer all those queries. With that, viewers, we're completely out of time on this edition of Ask Profit, but do stay tuned. India Market Close up next.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real
Hi, thanks so much for joining in and happy Friday to you for what it's worth. My name is Alex Matthew. With me is Hiral Dadia and Sharad Dubey. Guys, it's been a bit of a troublesome week for the Indian equity markets and today is no different.
Yeah, I mean, the kind of cuts that you're seeing, that profit booking that's coming in, I think what it's lacking is the confidence that there is value in India.
And where is the trigger? We are just not understanding. There is no major negative trigger also happening, and now the key moving average is Nifty is below that.
So IT is another factor that we're watching out for as well.
IT is another factor. In fact, we'll talk about all of that. Let's start with a check on where the benchmarks are, Sharad. And 0.7% lower at this moment, broken below that 25,100 mark. In fact, 25,500 was what we were talking about. If we break below this level, we're talking about the possibility of going to 25,000, right? So this is something that you want to watch for. Let's take a look at the heat map as well, just to see what the picture is, and there is significantly more red on the screen than there was yesterday. Reliance Industries is just about flat. So earlier today it was losing about 1% or so. It's recovered a little bit of ground. If it was worse off than it is right now, you would see more pain on the benchmark. Trend
the IT
okay.
is doing well.
Yeah.
A little bit of short covering for third day. But Alex, the red.
The red is significant, but even IT, and we'll see when we pull up the index, it has come off the high point of the day considerably so. But HDFC Life, Bharti Airtel, Indigo, you know what? Bharti Airtel is actually making it to the lower list or the bottom of the screen for quite a few of the days this week. We'll have to figure out on the charts whether there's something to watch out for. Interglobe Aviation, of course, reacting to that update from the DGCA. That is good news for you and me, Sharad, not so much for
consumers.
Indigo,
It's good, yes.
which is cancellation of tickets becoming easier. Maruti Suzuki, a few other names in the automotive pack doing not so well. ICICI Bank losing about 1.5%, and this is going to be posing a little bit of a challenge. Very quickly, I just want to pull up the IT index intraday chart, because this is something that started off with significant gains, and you've actually seen a complete deceleration from that point. You've seen this play out over the course of the last couple of sessions as well. When that big news came through, the positive news came through, it actually bounced back. That hasn't been holding, right? So you spoke about the moving averages. What are the key factors to look at?
Exactly. But the first thing is that 25,350 mark. That was the 200 DMA. Now we are below that. 1 month low levels at Nifty. So it's a key technical average if you are tracking this. But remember, for the medium term basis, buy the dip strategy definitely holds. It's not intraday of one more session, but for the medium term basis. Options data is suggesting a minor recovery might be possible later on if a little bit more selling comes in, but largely IT is seeing short covering for the third straight day. But will it hold up? That's the question. For the last 2 days, the answer is no. Major sectors are seeing losses, but they're in a very narrow range, something between 2 to 3%. There's no major sell-off happening, but of course, capital market and select NBFCs on Bihar MFI News also are seeing a big drag. And interestingly, the European markets have opened positive. So largely we can say a neutral sentiment globally, but definitely we want to understand why the indices are cracking in trade. Over to you, Hiral. Stock specific, what's there on your watch list?
Lots more on the watch list. Thank you, Sharad. But before we head across to the watch list, Reddington, Tejas Network, Supreme Petro, Camlin Fine, Sarda. Few top movers in trade today in a market which is actually drooling under pressure. And to add to that, what continues to remain under pressure is Home First, VMM, which is VMart, Vesuvius, Credit Access and JK Tyre. These are few of the stocks which are moving in trade as we speak. But on the watch list, pressure continues when you talk about the consumption pact, from a Nestle to a Tata Consumers and HUL, all under pressure. Eternal has seen a good recovery after that extended fall. Ultratech Cement, that stock is trading under pressure, not done really much in the last 6 months. Maruti Suzuki is seeing selling pressure. In fact, as Alex mentioned, all of your other auto names also are in focus today, and that is on the back of the auto sales numbers that will trickle in tomorrow. That is on the 1st of March, which is a Sunday. Reddington is also up in trade. Tejas Network, Praj Industries, Sun TV are all buzzing on the back of strong volumes. SpiceJet again on the back of the block deal along with a VMart retail. Vesuvius has reported numbers and that stock is in focus with a Coromandel which touched a 2-month low. In fact, some momentum or some movement that's happening when you talk about fertilizer stocks between yesterday and today. So watch out for that space pretty closely. And volume building up on Apollo Microsystem. You have your entire MFI pack which is in focus on the back of the Bihar MFI bill. That's the microfinance, bill that has come up, and that impact is what is visible. So these are the stocks that are in focus in today's session. But let's get in. Kunal Shah from Mirai Asset Share Khan, who's joining in to talk to us about what the levels should look like. And we have Deepan Mehta from Elixir Equities. Welcome to the show, gentlemen. Always a pleasure to speak to you. Kunal, let me come to you first. I mean, interesting sell-off that we're seeing in terms of where markets go today. The week has not really been that great, and it's specifically IT also, which has been on a back burner, though some kind of respite in today's session. If you have to look at Nifty and Bank Nifty, what are the levels that you're tracking from a perspective that someone wants to enter in trade on Monday?
Good afternoon. Good afternoon to everyone. See, I think firstly, what we have seen post that the US trade deal, the high gap up of what we had, we have been continuously making from those levels a lower high formation. So clearly there is no momentum in the markets. Today, again, 25,500 has also been broken on the downside 400 zone. And I think now the gap area, which is there around the mark of 25,100, that will be tested on the downside. So overall, the view remains negative, sell on rise for the market. 25,100 is what I'm expecting to be tested on the downside. And if we sustain below that, then we will probably will be heading towards 24,900, 600 zone. On the higher end, till the time we don't surpass 25,600 again, the view continues to remain negative on the Nifty index. The Bank Nifty index here in the last 3 trading sessions, what we were trying to defend was 60,800. That has been broken in today's trading session. But again, Bank Nifty has a couple of supports where 60,800, the next is 60,500 on the downside. A decisive break below the 60,500 will open up the doors for the Bank Nifty on the downside towards 59,700. 59,800 mark. So I think these are some of the key levels which one should watch out for. And if one wants to go long on the Bank Nifty index, only on a breakout above 61,300, one should be aggressive long, or else one should remain cautious even on the Bank Nifty index.
So there is a clear divergence, for FI favorites, so be it IT or banking, both sides, the story is very different. But Kunal, I just want to get your technical picks also. What will be the important picks today?
Yeah, I think overall, what we have seen in the markets, pharma again continues to be the safe zone on these levels. So I think landmark pharma still looks positive to me from the current levels. The recent swing high, swing high, which was made, that has also been taken out. So clearly a bullish momentum that is playing out. You can expect the stock to go towards 2200 on the upside in the very short term, keeping a stop loss on the downside close to 2100. The second stock, which is there on my radar, that is on the weaker side, that is CDSL. It has started to lose momentum, facing rejection at the 20 DMA. There is follow-up selling pressure, and we have seen the stock forming a low top, low bottom formation. So here again, the sentiment continues to remain on the weak side. One can expect further decline over here, 1,240 to 1,020 is what I'm expecting on the downside for CDSL. CDSL remains a sell for me with a stop loss of 1,330 on the upside.
Right, so those are the stocks that you should watch out for on the basis of technicals. Deepan, before we get into stock-specific questions with you or pointers with you, just wanted your initial view on what you're seeing this week. Because one would have thought that with some of that tariff turmoil dissipating, of course there remains a little bit of uncertainty, there would have been a little more interest in the Indian equity markets, but it seems like every move upwards is being sold into. On the fundamentals, are there any triggers that you see that are causing this pressure on the downside?
Yeah, good afternoon, and thank you for having me on your show. No, I don't think so. I think fundamentals remain strong, and today's GDP number also perhaps will reflect that as well. We've had a decent earnings season per se, and apart from software services, I think all industries are chugging along pretty fine. Growth dynamics are decent, and because of this correction, valuations also are at reasonable levels. So I'm a bit perplexed why the market is behaving the way it is, but look, market is God, so we have to respect it. My sense is that this uncertain time can last longer than we think. But from an investor's perspective who has got a 3-year view, I think these are great times to be overweight equities, especially small mid-cap stocks. I get the kind of a same feeling when I was just around COVID time, and after the returns were phenomenal. So I'm pretty positive on the market as a whole. I could be wrong. You could see another 5-10% correction also. But if you're prepared to ride out more uncertainty, more correction, and build your conviction, then certainly I think next 2-3 years could give very good returns.
So next 2 to 3 years, something which Deepan Bhai has stated that there can be a good returns coming in. But let's move on. The Supreme Court has delivered a decisive ruling in favor of Sarda Energy and Minerals, rejecting all appeals filed against the company's resolution plan for SKS power generation. Varsha is here with more details. Varsha, the stock is up 6%. What are the key takeaways from here?
Well, we all know that Sarda Energy is actually moving from minerals to energy portfolio, and hence this ruling is very important, and hence we are seeing the stock is up 7%. Now this is related to Supreme Court approving Sarda Energy's buyout plan when it comes to SKS power. The deal value stands at around 1,950 crore, and the legal fight is finally over. Now, who is buying whom? So Sarda Energy and Minerals will acquire SKS power generation, and the process is done under insolvency and bankruptcy court. Now, who opposed the deal? Well, Torrent Power and Zindal Power challenged the plan, and Supreme Court rejected their objections, and finally Sarda Energy will buy SKS power. Now, onto the what does this mean? That Sarda Energy officially wins the bidding war, can take control of SKS power. No more legal uncertainty, no more that legal overhang on this. Now, why this is important? Because of the big expansion move for Sarda Energy in power sector. As I was saying, the next growth trigger is actually for Sarda is power segment, and shows that IBC approval plans are filed and protected. Now, this is a positive signal for future insolvency cases, and as we know that Sarda Energy is going big when it comes to to their energy portfolio, and all the growth has been aligned to the power or energy sector, and hence this ruling is really important because that aligns the growth prospects for the company, and hence we are seeing the stock is up almost 7 to 8% in trade.
Okay, right. Yeah, well put, Varsha, and that allows us to pose the perfect question to Deepan Mehta. Deepan, if you've looked at Sarda Energy, of course, the story or the conversation about the change that they are undergoing in the business lines that they have is well known. But what do you make of the latest development?
No, sorry. I have no clue about this story. I don't want to comment.
That's perfectly fine. All right, let me go across to Kunal then on the technical charts to see if Sarda Energy, with about 6% of an uptick as things stand right now, has more legs to it. Would you buy right now?
I think, yeah, definitely I'll buy it right now. 539, 540 has been the hurdle for the stock, and that has been taken out today decisively with volumes. So now it opens up more upside for the stock. The next level on the upside, what I'll be looking out is somewhere close to 584, 590 on the upside. So I think even at the current levels, it looks attractive to buy. Now the support on the downside is placed at 525, 530 zone.
All right, but the closing is very much important, especially if you are in the F&O space, because the 200 DMA level, that has been breached downwards for Nifty Index. But let's look at stock-specific moves where the action is coming in, long build-up coming in. Interesting for Dixon Tech and ONGC Oil India also going up in trade, or BSE Oil and Gas Index actually doing well, one of the top gainers. I could talk about it. Let's also see the short covering candidates where the action is there. Kalyan Jewellers and KA Industries, but it's not that convincing, but definitely volume pickup is definitely there. Long unwinding also, no major trade because most of the trades are happening in the short segment. But yes, Dalmia Bharat, that's where a little bit of long unwinding has started taking place. But today, of course, the capital goods and your select NBFC companies, this is where the pain is. Let's just show the key short build-up which is happening, and largely we see one is coming in from the capital goods, the capital market space, that's down 4%, and Bandhan Bank, that's also seeing a little bit of pressure. Kunal, I want to get you on this. Two sectors, both capital and the select NBFCs which we are talking about. Of course, there's the Bihar MFI impact also, which we'll talk with Deepan on that. But on the technical charts, capital market stocks and select NBFCs which are cracking in trade, what are the technical levels looking like, and the important stop losses also?
I think firstly, the one call which I initiated on the sell side was from the capital market space, that is CDSL. So again, that continues to be on the negative side for me. You can expect further lower levels for the stock towards 1200 mark as well. So that is again looking on the weaker side. Even from the capital markets, CAMS has also given us a breakdown. So that is also looking weak. Can test the lower end of 610, 620 zone. So CAMS, CDSL, these are some of the stocks which are looking weak. I mean, NBFC space, I think overall here the setup still looks more or less sideways to me. In fact, contrary a little bit, I'll be bullish on certain NBFC stocks over here. If you get a dip in LTF, that would be a good buying opportunity around 275 to 80 zone. Probably one can expect a good recovery again back towards 300, 305 on the upside.
All right. Let me go across to you, Deepan, on a couple of interesting takeaways from conversations we had this morning. And we spoke to two companies. Pine Labs was one of them. Zaggle was another one. And both of these entities, the management said that 25 to 30% already of their coding requirements are being taken care of by artificial intelligence. Zaggle said that they've reduced their workforce in the third quarter, and Pine Labs said that they're unlikely to need more engineers from this point on. Productivity gains are going to result in any improvement that they see or any incremental generation of business. It's going to get taken care of with the existing stock. Is this only a sign of various other players operating in the same manner? And what do you think the financials will see heading into FY27?
First of all, I think it's a very good particular story and theme to track, and maybe you should ask more and more managements, especially companies which are heavily technology driven or dependent, not driven, dependent, as to how they're adapting artificial intelligence. And one kind of a situation comes to mind about the Bajaj Finance con call where Rajiv Jain explained in detail how they are using AI. So I'm certain that there'll be many winners in this AI theme, and companies which are able to embrace this change and proactively work towards using AI will be the winners. And I think you already found two companies over there, Pine Lab and Zaggle Prepaid. A disclosure that we are invested in Zaggle Prepaid and Bajaj Finance, and Pine Labs is also top of the mind in terms of fresh investment as a measure of disclosure. But I think that the application of AI will differentiate you from the competitor. And I think early adopters will certainly be rewarded very handsomely by the street. We should track this particular theme more closely. And I think that there's just too much of attention being given to the software services companies and how their models get disrupted or not disrupted. Are they going to be implementing AI? Are they going to get, less business because of AI? That is just noise. End of the day, if you want to have an eye on the ball, exactly what you did, focus on companies which can cut their cost by 15-20% or so and get those gains over there in terms of better productivity, better operating profit margins, or improve services, and that can just strengthen their moat.
A nice take, Deepan, when it comes to usage of AI and the kind of companies that could benefit out of this as well. But stay with us. It's time for the rapid fire now. A couple of stocks that we're talking about in today's session that I will be taking you through. But Kunal, let me come to you first. Tejas Network, that's the first one. They've got a supply order, strong moves coming in there.
I think from the past two trading sessions, the stock has witnessed a good move on the upside. Now, the next level, what I see on the upside for the stock from a short-term perspective would be 500. So there is some rally pending. It could go towards 490, 500 zone from the current levels. But fresh entry at the current levels, I would not recommend any dip. That would be a good opportunity to enter into the stock.
Okay, correction is an opportunity to enter. Redington, 17% gains, biggest intraday gain since November 6, I beg your pardon, strong trading volumes.
See, I think the next level of resistance for the stock is somewhere around the mark of 300. 284 is where it is currently trading. So can extend this gain towards 295, 300 on the upside.
Okay, Phenolics Cables is trading with strong volumes as well. Along with that, look at a Vishal Mega Mart. Your views?
I think Phenolics Cable, a little bit of upside is still left towards 970, 980 zone. That could be tested on the upside. So still the view remains positive. We have seen strong moves in the past two trading sessions.
Okay, and what about a Vishal Mega Mart?
Vishal Mega Mart, again, we had seen some buying interest from the lower levels, but now again, that has been wiped out. So here the view remains, if 115 on the downside is reached, then probably you will see further selling pressure.
Okay, so that's the rapid fire, but another stock that we want to pull up is the IDBI Bank as well. Let's look at that one because there are news reports suggesting that Fairfax is the front runner, and this is to actually buy majority stake in IDBI Bank. That stock is at the day's highest levels as we speak, and this could actually become one of the largest foreign investments that could be coming in terms of the banking sector. The government's 61% stake is valued at around $8 billion. Now, this 61% stake is what the government as well as LIC hold. There are talks ongoing. The deal outcome is something that is still uncertain, is what they're reporting. Now, whether Fairfax has the capacity or not is the question. They've said that they will be able to purchase it independently. They may bring in a partner at a later stage, is what reports are suggesting. And this could actually, Fairfax could actually consider merging a IDBI Bank with a CSB as well. If you pull up the charts of CSB, let's see what's happening on that counter. And Fairfax, as we know, already controls a majority stake in a CSB. That stock nearly at the day's lows. Some minor correction coming in from there. Deepan, your view in terms of, IDBI Bank, Fairfax coming in, and a potential merger of the two banks?
I think it's great for minority shareholders of IDBI Bank, and even if the transfer of ownership does not take place, I think IDBI Bank is now a phenomenally efficiently run bank with good quality balance sheet as well. They have completely wiped out all the old losses which they had. The NPAs have been cleaned up. Now their loan book is amongst the cleanest in the industry. Growth rates also are better than the industry growth rates. And certainly, I think they are on a new growth plan. So it'd be a good purchase for whoever buys IDBI Bank. And at the same time, I think a merger with CSB also will make sense because I think geographically it will kind of diversify the revenues, and a stronger bank is always welcome. But I just have one word of caution on the entire banking industry, that the way the industry is going is becoming more and more of a red ocean, and competition has come through from the PSU banks also, which was not there earlier. And also, I think a lot of competition is there from the capital market. So I would be a bit circumspect in the medium to long-term prospects of banks. I'm not completely convinced that such high 3% type of plus net interest margins are sustainable. Although I think India's lending requirement is strong and chasing consumer lending is a good idea, I would prefer to play through the NBFCs where there's more flexibility in terms of lending, in terms of the norms, provisioning as well. So that's the way I would like to play it. With banks, I'm getting a bit circumspect with every passing quarter.
Right. So bank, of course, there is a skeptical approach to it, but NBFC is something which Dipan is finding a little bit of comfort. But now it's that time of the day where we get you the khabar on the street, and Somit is here with the stocks. Somit, in this market also there must be a couple of stocks which are there in your radar, where the buzz is there.
Well, just 3 stocks, given that market is quite weak, not much of an action that we are seeing. Or not much of chatter in dealing rooms that is happening. A few stocks that still dealers have highlighted. Firstly is MCX. Dealers indicate that there are some buy flows on the institutional desk at the lower level that we are seeing for this counter, and dealers indicate that some margin easing on gold and silver is something that will benefit MCX and could lead to higher volumes. So that is one of the reasons why we are seeing some buy flows at the lower levels for this counter. Dixon Tech, that stock has been gaining on reports of fresh round of PLI scheme for smartphone makers, and hence that stock is gaining in even such a weak market. But dealers still indicate that there are sell flows that continue on higher levels from the large HNI desk that is still continuing for Dixon Tech. So keep an eye out for Dixon Tech as well. When it comes to Voltas, dealers indicate lower channel inventory ahead of summer, and that is one of the reasons why the stock has perked up nearly 2% in trade. Channel checks are indicating that higher stocking has happened so far in the 4th quarter in anticipation of a strong summer this year, and also because of some price hikes that could come in going forward because of the increase in the commodity prices that we have seen. So both these factors have led to higher stocking by dealers, and that is one of the reasons why inventory has come down, and this could benefit Voltas in the 4th quarter numbers as well. So that is one of the reasons why the stock has perked up.
Great. All right, Somit, very interesting 3 stocks, even if it's a limited list. And I would like to double click on Dixon Technology. Let's pull up the chart and see where it's currently trading, because I'd be very keen to find out what Dipan has to say about this one. 4.8% or thereabouts, and 10,600 now on the ticker for Dixon Technologies. It's a far cry from the heady valuations, Dipan, that it has had in the last 3 years. So therefore the question to you, yesterday we were hearing about reports of the possibility of lower smartphone sales, and this obviously has a natural bearing on Dixon Technology. But at the same time, there are, as Somit just pointed out, certain PLI benefits that are seen for the company. Do you think that the valuation as it's poised right now is attractive from the long-term standpoint?
I certainly think valuation-wise, it has reached attractive levels, and no doubt that a soft quarter. Management commentary also was weak, but I think these are companies, which are in a way, going to benefit from the longer-term trends which are taking place in electronic manufacturing. A lot of electronic manufacturing, be it mobile phones, other electronic devices, is going to get outsourced, and Dixon certainly has displayed exceptional execution. And also, one more fact comes to mind is that they are going very heavily into backward integration. And as and when the JVs and the new plans for backward integration, be it for cameras or be it for screens, they go into stream, they should be able to improve their operating profit margins, and also it may provide a new source of revenue for the company. So first of all, the disclosure, we are invested in Dixon Technologies, and we do feel that a lot of the negativity in the stock has got priced in, and maybe from these levels it can restart to retrace the lost ground.
Your views on Dixon Tech? The stock is up almost 5% above that 10,600 levels mark. What are the key levels looking like? Any other sustained up move from here?
I think the key levels to watch out here will be 11,200. That has been the resistance for the stock in the short term. So 11,200 is where I'm expecting this pullback. Overall, the larger term picture still continues to remain on the negative side. We'll further need confirmation for the stock for a trend reversal. 12,000 is something which would be on my radar. Once the stock surpasses that, then probably you can confirm a trend reversal into the stock.
So that's with regards to EMS players. In fact, Keynes as well has been in focus. PG Electroplast lately has been in focus. So watch out for these names which have been beaten down. Some buying interest coming back soon. But moving on, we're talking about IT and real estate hand in hand, because the moment there is pressure building in terms of IT, there are job losses, and that somewhere has an impact when it comes to real estate as a sector. Though today, if you talk about IT as a sector, it is buzzing in trade. Now, what is keeping it afloat? The oversold index is seeing some sharp rebound today. Two, your mood lifters mainly have been Accenture and Cognizant, where both of these counters have seen some good uptake, and that's what is having some bit of a counter impact as well. Now, AI is not becoming as a threat, it's seen as an opportunity, and your AI infrastructures, data centers, GPUs are the ones who are in focus, and valuations are at multi-year lows. It's the worst fall since September 2008, as we've seen in terms of the monthly fall on Nifty IT index. And in terms of February performance, Wipro is down 14%, worst fall in 4 years. Infosys down 20%, worst fall in 13 years. And you have HCL Tech Promoter buying that's coming in as well. Vama Sundari has bought around 4.4 lakh crore shares. So lots brewing in this space, but what's the counter impact that it could have in terms of real estate? Gulam Zia from Knight Frank India joins in. Gulam, welcome to the show. Always a pleasure to speak to you. What is the mood looking like right now? That's what we want to talk to you about. Are you seeing a change, a shift in terms of inquiries, in terms of the booking numbers that you're seeing, and specifically when it comes to IT hubs?
Well, first of all, thank you so much for calling me on this platform. Always a pleasure to interact with you and to be in front of your audience. The question relating the recent layoffs on real estate and impact of that, we still don't see any impact actually on both. Like either if I'm talking about housing sales or even offices, nowhere is it reflecting, because last year we saw a bumper year for office absorption, and at least the current trends is that the inquiries for office spaces is also as strong, if not any better, than what it was last year same time. And housing, very strangely, there is no slowdown in housing market either. Like we are looking at one of the best Februaries, the kind of numbers that we are tracking right now, the best month in last 14 years. In Mumbai, at least, the kind of registration, the euphoria is, there is no slowing down either. So while the layoffs are talking a lot of those AI-related, disruptions, but then at least on real estate, we don't see any impact yet.
Gulam, hi, Alex here. So just trying to understand then in certain pockets, and obviously these are, the real estate has to be looked at in micro markets. So I was speaking to somebody just a couple of months back, just before the budget in Coimbatore. They were saying that the property prices have gone up very significantly because of IT demand. And she, as a real estate developer, was saying that 60-70% of the demand comes through from IT. So hypothetically, if there is pressure on the workforce participation, and if IT companies as a whole are moving away from that workforce-led model to a delivery-based model, then is there the possibility that you could see supply slowing heading into FY27?
Well, once again, Alex, I would want to bifurcate this into two asset classes the way I did it earlier. So even if I'm talking about offices, that question, because the recent upswing in GCCs, Global Capability Centers, etc., has given a completely new twist to the Indian office space market for last 2-3 years, which never was a demand driver, say about 4-5 years back. So this is a completely new demand driver, which has added a huge momentum to office stocks in the country. And in different locations, as you rightly said, the impact is different. But specifically for housing, the only market which has seen some signs of slowdown is NCR, which is not so heavily dependent on IT, ITS. On the other side, Bengaluru or Hyderabad, these are markets which are, first of all, not showing any slowdown, any sign of slowdown. Hyderabad, for that matter, has been showing, a non-stop kind of improvement in prices as well as number of sales. The only thing, Alex, I agree with you is the price rise. The price rise has reached a certain stage where we are expecting that these are actually going beyond the affordability numbers, and that can have an impact on sales number in times to come. And many developers are already talking about that. And that's also reflecting in lots of those freebies kicking in. But net, at least till today, we don't see much of an impact. And as I said, markets like NCR have not much of a dependence on AI or IT per se, are showing signs of slowdown. So these are a few confusing signals emerging. But I can't put any of it purely on AI-led disruptions. The markets have their own nuances.
Ghulam, on that note, thanks so much for taking the time and for explaining this to us. Important to have you this afternoon.
Thank you.
I very, very quickly want to get your view, Dipan, on this, because some of the pre-sales data that we've seen is not as rosy as that, as you might think, right? So quick view on whether or not you see there being any disruption whatsoever on account of job losses, particularly because IT in certain pockets is such a large buyer of real estate.
Well, I think generally, real estate has hit a slightly softer trend, although the multi-year trend remains intact. But I think there are some minor challenges as of now. So I'd be a bit circumspect in real estate as well. And the numbers will come through, but I think the number of new projects and new bookings, base effect what's coming into play over there, should soften up a little bit.
So that's with regards to where IT, real estate go. Another sector that is in focus today, which will report, the monthly numbers on the first, is the auto sector. Let's quickly pull up all the counters on the screens because you'll see what is in store. Clearly, what you're looking at is a strong demand across segments. Now, Bajaj Auto, TVS, Hero Moto, Eicher. On a year-on-year basis, we are expected to see some bit of a growth in Bajaj and TVS. Hero is showing a 73% decline, so watch out for that one. And Eicher, again, lower double-digit growth is what you're watching out for. In terms of four-wheelers as well, on a month-on-month basis, between January to February, you'll have to compare. All of them are expecting a decline in that range of 7 to 10%, whereas on a year-on-year basis, you're seeing M&M, which is seeing very strong growth, which is then followed by Tata Motors. You have Hyundai and Maruti Suzuki pretty much at the same levels. Commercial vehicles, a similar trend, 24 to 28% is the kind of growth that you're expecting on a month-on-month basis, but on a year-on-year basis, it's seeming to be absolutely flat or mildly negative for a Eicher VECV. And in terms of tractors, again, it's been a good season for tractor sales. 22 to 29% is the kind of growth on a year-on-year basis. But it's going to be interesting to see how a M&M could see a deceleration to the tune of 20%. And these are consensus estimates that we are picking so far. Nomura's view is that passenger vehicle inventory is comfortable, discounting is slightly higher, two-wheeler momentum is firm, and it's rural sentiment which is strong. Jeffries is talking about wholesale to be in double-digit growth across OEMs, and they're expecting wholesale growth in that range of 10 to 45%. You'll see the numbers on your screen. So very mixed views coming in there, and the month-on-month and year-on-year growth is showing you some bit of deviation. So that's what the auto numbers are expected to look like. But very quickly in terms of markets, a sudden downtick, Alex and Sharad, that we are seeing right now, and that's what we need to address. And I would request Deepan to stay back to talk to us about this as well. The sharp downturn that's coming in, we are at the day's lows. We've broken below that 25,250 mark as well. 25,200 is something that we should be tracking right now. Let's just look at the components and contributors of Nifty 50 to understand what is putting pressure from an ICICI Bank, Bharti Airtel, HDFC. So it's mainly your financials which are actually putting that kind of pressure right now. If we can also see a RIL, because that is another heavyweight, a mild change in terms of Reliance Industries also has a major impact. If we can have that intraday chart, there you go. Reliance Industries also seeing that sharp fall right now, which is being reflected in terms of Nifty 50. Deepan, a sudden downtick that we are seeing in terms of markets. What are you picking up? Anything that you see here?
No, I'm in front of your cameras. I haven't picked up anything. Right, it's okay. These things happen. I think today there's MSCI rebalancing, so maybe something is happening over there, but nothing really to pin down why such a huge correction has taken place.
But you just added value, because MSCI is something we completely missed out. We spoke about that this morning, and yes, absolutely, it's the MSCI rebalancing probably which is causing this kind of a move right now. But thank you so much for joining in. Always a pleasure to speak to you. I mean, this is something that we picked up this morning as well, with the inflows and outflows that could happen, and I think that's being reflected. Yes.
Exactly. For the last half an hour, you will see the volatility, because the adjustment day comes in.
It does. We'll talk about some of the stocks that we've just mentioned. We have to slip into a very quick break. On the other side, you'll get the top buy today and sell on Monday strategy. Stay tuned.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.